This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia. Sonia, good morning.
Hi.
And Nigel is joining us from the NSE. Morning, guys.
Hi, Nigel. Good morning. Prashant and Nigel, it's been, a couple of good days, a couple of bad days. Thankfully, we are at the better end of the stick now. But Nigel, you're at the NSE, so good morning.
Well, morning, guys. Happy to be anchoring, actually, from the NSE. I started my career at the NSE, so a bit of deja vu playing out here. And, it looks like a good session is in store. So let's hope we can build on to the gains that we've seen in the last couple of days.
Absolutely. And I think, yesterday we got follow-up, and I think it'll be interesting to see if you're able to build on that in more ways than one. So let's just sort of start by telling you what you need to know as we begin another session. And I'll begin, as I always mostly do, from looking at where we left off things yesterday. So the market came off towards the end. I mean, we were off about 50 points from the day's high. It was at one point looking like it'll be a 200-point kind of a day, but it was 100-plus kind of points. 50 points off. But I don't think we should nitpick. It was 100-plus points higher day on day. And global cues, importantly, remain supportive as well. Not that that has mattered in any large degree in that sense, but S&P was up about 0.5%. The Nasdaq has been up about 0.75%. This is, of course, what happened overnight. And, the market in the U.S. kind of managed to dodge a bullet. And that bullet was, of course, the April producer price index numbers, which came in stronger than expected. But I guess, some of the past numbers, like the March PPI numbers, were revised lower substantially. So the market chose to ignore it. The 10-year yield, which actually perked up about 5 basis points when the data hit, actually ended down about 4 basis points to 4.4. The dollar index is very, very steady, closer to 105 now. And that also came off a little bit. You also had Fed Chair Powell popping up in Amsterdam, and he made some comments, which I think the market took very nicely. He essentially commented on the data which was released, which is the producer price index numbers, and he said that it was quite mixed and not exactly hot. He reiterated the sort of same statements he's been saying, that the next move of the Fed is not going to be a hike, unlikely to be a hike, right? I mean, so naturally, perhaps looking at a cut. But he said, well, it perhaps is a slightly longer road to get to that 2% inflation number. Nothing he's not said before, but that sort of comment on yesterday's data, I think, is what cooled markets and calmed markets a little bit. The big one, of course, is the US CPI number later today out of the US, and I think we'll have to watch out for what that throws our way. So the consensus is about 0.3. If that is a big number, I think that can be kind of a market mover for the rates market and equities as well. Before that, you get the retail sales number as well. I think that will give us a comment on what the US consumer is looking like. Now, just to sort of recap the levels, it perhaps is a reiteration of what I've been putting out for the last 2 days. The price action needs to tell us that we're out of the woods. And, you basically have to look at some markers for us to be able to do that. So yesterday morning, we said that, the first kind of pit stop is the 40-day exponential, which was 22,272. Yesterday's high was 22,270. So we almost got to that 40-day and then sort of pulled back a little bit. So that, I think, keep an eye out on that. The 40-day exponential is still around those levels, but the 20-day comes into play now. And that, as of yesterday's close, now stands at 22,320, about 100 points away from where we left off yesterday. And beyond that, you look at retracement levels of the recent fall. So the 61.8 is 22,422. So basically, 100 points from here at the 20-day, and then 100 points from there, you get to the retracement, the golden retracement, the 61.8 of the recent decline. And of course, on the way down, we should not break the sort of low that we saw. 21,821 is the number. It's a very similar kind of setup for the Nifty Bank as well. We ended higher, but with a smaller advance as compared to the Nifty. Here we need to get above the 20-day, which is 48,169. And we left off at 47,859 yesterday. And of course, beyond that, you get the retracement level. And on the way down, the swing low that we saw, which is 46,983, about 47,000, by the way. That's a number that should not break and that should hold if we are able to build on what we've seen for the last 2 days now Day before yesterday was that big 200-point swing from the low to the high. Yesterday was another 100 points. So let's see what we managed to do. Again, I mean, I said this yesterday, don't get very excited at high levels. There perhaps is going to be a little bit of selling pressure which will continue to emerge. But what we're only looking for here is that the fall perhaps stops and we move a little sideways with intermittent bounces. The GIFT Nifty will come up on your screen and that will give you an indication of how we're likely to start. So 60 points higher on the GIFT Nifty this morning. Sonia.
Absolutely, and I think the one thing that we've had relentless support from is from the globe, right?
Yeah.
Once again, you've had strong global cues. The Nasdaq, in fact, hit a fresh record high. So global cues have been very strong for our own markets as well, right? Yesterday, we saw a very strong pullback, closed above the 22,200 mark. And as I said, global cues are also very stable this morning. But the FI selling is something that continues. So FI is once again sold in the cash markets a huge amount of almost 4,100 crores in the cash market. So that is continues to be a problem pocket for the market. But there are plenty of stocks that I'm looking at this morning. Top of mind is what's been happening with telecom. Bharti Airtel came out with their earnings. Largely, the numbers looked good. The biggest positive was the strong subscriber addition and lots of brokerages coming out and, raising the target prices on the stock. In fact, Jefferies has raised their target price on Bharti to 1590 from 1300. So that is one stock in focus. The other stock I'm looking at this morning is Siemens. Very strong set of numbers. It was an EBIT beat across all segments. And the board has also approved the demerger of the energy business into a separately listed company. So margin expansion, strong quarter. Definitely that stock will be in focus today. And apart from that, Shree Cement, very good set of numbers also coming through this morning, post-market as yesterday. So that will definitely be another stock in focus this morning. So plenty of stocks to look at. The GIFT Nifty this morning is also suggesting a strong start. But just remember, the VIX has been surging quite a bit. So volatility can work both ways. We had one good day, one bad day, and you could perhaps burn your fingers both ways. So yes, this is a pullback. This can extend itself, but it's still better to be a bit cautious until you get a secular trend in this market. But Nigel, what are you tracking?
Well, that's right, Sonia. I think volatility is going to remain high. And, this market's not for the faint-hearted, at least in the near term, till we get that election outcome. For today's session, as the GIFT Nifty is suggesting, we're going to be starting in the congestion zone for the Nifty. The Nifty Bank will play out the weekly expiry as well in today's session. So that will add to the volatility, particularly in the second half of trade. And we have a barrage of U.S. economic data that's expected post-market as the inflation print. You have retail sales and other economic data as well. So lots to look forward to, even post-market, because a lot of economic data will be coming in from the United States. One quick point on the flows, the institutional flows, and I made this point yesterday, if that institutional net sell number doesn't go to around 1,500 crores, we're pretty much okay. Yesterday, the net sell number was 500 crores and we ended high with a gain of close to around 100 points. So you don't want that net institutional sell number to go out of whack, to go to around 1,300, 1,500 crores on. As the screen is telling you, when that happens, then you see a bit of a pullback on the headline index. The VIX. Yes, it's been surging for the last few sessions, but yesterday after 13 sessions in which it went from around 10 to around 20, well, it cooled off from the high point of the day. So it doubled in 13 sessions, and yesterday as well it was higher. But as we saw the VIX cool off, you saw the Nifty as well moved off. So, that volatility index is in check, and you don't want it to run away, but it's par for the course, right? Even if it goes to around 24, 25, well, it's par for the course because we're anticipating a big verdict. And the IVs on both sides will be relatively higher getting into that event. Well, what did the FIs do? In yesterday's trading session, they unbound some longs. 20,000 long contracts were unbound. And short positioning increased by close to around 18,000 contracts. So the swing factor out there is close to around 38,000 contracts, which took the total net short positions from the FIs to more than 2 lakh contracts. Now, this is important because, you need to adjust for the change in contract size. So if we're looking at it on a like-to-like basis, now the FIs are net short on that 1 lakh as per the old contracts. It's appearing like 2 lakh contracts, but there's a change in the contract size. So that's what we normally look forward to, and that's precisely what's happened. What about the options data? 22,100 put, 22,200 put. Both of them did see some addition. And in a market that ended higher, you want to see the nearest possible put seeing some kind of writing, and that's what happened in trade. Which brings us to the levels. We're at the congestion zone, 22,300, that's the important mark, 2050 DMA around there. And a reference point on the downside will be around 22,000 odd, because that's where the 100 DMA as well comes in. The lower support is at around the 21,800, but 22,000, that's a mark you should track. The Nifty Bank is pat in the middle of those levels that we've been talking about, the 20 as well as the 100 DMA. So that's the broad range that the Nifty Bank is trading in. The stock that I'm looking at is Shree Cement. All its peers did see a contraction in EBITDA per ton on a sequential basis. Shree Cement went ahead and held it steady. In fact, there's a marginal increase out there. So the stock opens up in the green, but we'll await further clarity, and the management will be joining in at around 9:30 a.m. today. And just one quick point, since there's that MSCI rejig that's been announced, India's weightage in the MSCI Emerging Market Index, it's set to go to around 19%. 4 years or so ago, it was only around 8%. So there's a big surge that we're seeing now. Then China, it's come down from around 43% to around 25%. Yes, it's in relation with the way the stock markets have moved on the whole, but you can't avoid India, right? Just take a look at the way we have outperformed, and that's why this big switch in terms of weightage on the MSCI Emerging Market Index. I just wanted to add that point, guys.
Okay, thanks a lot for that. Well, lots of stocks in focus. So without wasting any time, let's get you some money market views this morning. On the rupee front, Kunal Sudhani of Shinhan Bank says that the dollar index eased after an unexpected increase in the US producer prices in April amid strong gains in the cost of goods and services. Fed Chair Jerome Powell signals a strong US economic outlook, which may delay the interest rate cuts. Important levels to watch on the dollar index is 104.75, and if that breaks, then it can test 104.2. All eyes are now on the US CPI due today. For the dollar INR, 83.42 acts as a support, while 83.60 is a resistance level.
Well, on bonds, we've got Neeraj Gambhir of Axis Bank, who says that India's CPI inflation came in at 4.83% as expected, with core inflation inching lower. Government announced another buyback of 60,000 crore rupees for the week. He expects the 10-year benchmark yield to take cues from the US CPI data and trade in a range of between 7.05 and 7.15% for the week.
Okay, we have lots of stock-specific action to track today and many on the upside. So we'll get to that in just a bit in our special segment. Top 10, we're looking at Bharti Airtel, Bharti Hexacom, Shree Cement, Siemens, Colgate, Patanjali Foods, Radico Khaitan and Oberoi Realty. That's on the back of positive news flow. And Cipla and Apollo Tyres are likely to open in the red post their numbers.
All right, well, a lot going on, right? Jeffrey Dennis is with us, independent emerging markets commentator. Jeffrey, good to have you with us here. Good morning. Prashant this side. Thanks for joining us here on CNBC-TV18. So what's with all these tariffs, Jeffrey? Yes, we were talking about how but this was expected. Green exports out of China, EVs being tariffed higher, much higher. And by the way, newspapers in Europe are also reporting that EU is increasing tariffs on electric vehicles out of China coming into Europe quite substantially. Elections in the US 6 months out, but we're already starting to hear a lot of noise around this. Your sense, and could this become a bit of a risk?
Oh, I think it is a long-term risk for markets. I'm not sure it's necessarily a risk in the short term, but I think what's slightly concerning about it is that initially tariff increases were imposed by President Trump in 2018, and everybody thought, this is really bad news. It's a really poor way to run a global economy, and it runs the risk of global recession. Now, it seems that not only the Trump Republican Party, but also the Democrats are doing the same thing. And of course, you're seeing, as you rightly say, some talk about tariffs in Europe also. Now, I think this sort of reflects the way in which, you're getting some disconnect between these big regions now. US-China trade has slowed right down, partly because of tariffs. And I think you have to watch this very, very carefully, because the economists would say, and I am an economist, that free trade is really the best way to go forward. So I'm watching this for the long term. I don't imagine it's going to be a problem in the short term, but it seems whoever wins the next US election, we're going to see more tariffs. And I think that's bad for the global economy over the long term.
Okay, Jeff, hi, good morning. How are you feeling about a market like India? We've had a great run so far, but we have a big event upon us, which is the general elections. And, the opinion polls or the narrative is swinging at this point in time. So there's no certainty whether the current government will come back to power in a dominant way. There is some volatility in the market now, but do you think this is a great opportunity to buy into India?
I think it is for the long term, but certainly in the short term, there are, I think, a number of uncertainties. Now I would list a few here. Number one, as you say, the election. I was talking to a dear friend of mine, Indian friend, just yesterday, and he was saying to me, look, this thing is by no means guaranteed the BJP will increase their majority, maybe not even become the biggest, the next leader, the next prime minister, Mr. Modi. again. So I think that would be a big negative for the market in the short term. I think what's happening also is China is finally rallying. It's actually boosted emerging markets a lot, and there's so much debate amongst emerging market investors about, do I go to India, do I go to China? Obviously, there's much more choice than that, but this is sort of India versus China thing. And China has clearly done much better this year, although India is a small outperformer as well. And then thirdly, and I think this is really important for, the fundamentals of the market, you will only, I think, see India doing really, really well here when you have a sufficiently weak US dollar that you do see a little bit more stability of the rupee, possibly even some sort of a rally, which will ultimately, given these pretty decent inflation numbers in India, allow the RBI to start thinking about interest rate cuts. And so I think those are all the uncertainties that are being generated right now in India. I still think it's a great market for the long term, but there are some uncertainties in the short term. Without any question, this, I'm sure, explains some of the bad news recently in terms of FII flows.
All right. Hi, Jeff. Good morning. Good to see you, Win. Jeff, our markets are not really prepared for any kind of shock or any negative outcome. We want to see continuity of the current government. So as of now, I don't think the markets are positioned for any shocker, but we take your point on board. Now, the toss-up between India and China, there could be some near-term headwinds for India. Valuation-wise, well, we're trading much more expensive than China as well. So in the near term, what's your preference between India and China?
I can see the Chinese market has got a bit of momentum here, and I think it could well outperform for a while longer. But the bottom line here is that the government in China is going to really struggle, in my opinion, to get the economy to grow at the 5%, about 5% target that they're talking about. And they've got massive, massive problems within the banking system, and in particular, of course, within the commercial real estate market. So I think the fundamentals much favor India here over China at this point. Now, India's expensive. It's always expensive. It's always more expensive than China. And one of the reasons China's done better this year is because it had 3 terrible years and it suddenly became very, very cheap. Over the long haul, given India's growth potential that is still there, given, I think, really quite reasonably stable currency performance, given how strong the dollar's been, and given that I think at the end of the day we probably will get the BJP government coming back, but of course that's an uncertainty. This is still the best growth story within the emerging market. So over the long haul, I would far rather be long India versus China. It's just that right now we seem to be in a sort of a pocket of uncertainty about that, and China's doing well, but I think China's got a lot more long-term economic challenges at the moment than India faces.
Okay, China has a lot more economic challenges than India. So in the longer term, India is a good growth story. Got that. Jeff, thanks a lot for stopping by and speaking to CNBC TV18. Appreciate your time here. That's the word coming in on the global market setup and how market observers are looking at India. Let's step into a quick break. On the other side, our list of top 10 stocks with our entire research team comes up. Stay tuned. Well, our research team is standing by with CNBC TV18's list of top 10 stocks for the day. Let's kick it off with Cipla. That's first on our radar. Vivek is here to tell us more about that. Vivek, over to you.
Well, good morning. Cipla is in focus on the back of a large anticipated block deal that could happen in today's trading session. We had access to the term sheet last evening, and according to the term sheet, we understand that the promoter group is looking to sell a little over 2.5% stake in the company via a block deal. Now, the selling shareholders are part of the promoter and promoter group. Remember, they held a little over 33% stake in the company, 33.47% to be precise, at the end of March quarter. Now, the price range of the expected deal is between 1,289.5 rupees a share to 1,357.5 rupees a share, which indicates a discount of up to 5% to yesterday's closing price. Remember, even yesterday, the stock was under pressure. So at the floor price of this particular block deal, the the total amount that could exchange hands is close to 2,637 crores. On the back of that, we are going with the red at this particular name on the back of the large supply that the stock could see in today's session.
All right. Vivek, thank you very much for that. Well, let's focus on the telecom space, right? And Bharti, which reported numbers yesterday, and Bharti Hexacom, both are going to be in focus. Reema has got details here. Reema, morning.
Hi, good morning. So Bharti Airtel has reported in-line numbers. Now, Bharti is a sum of parts. There's Africa, there's Enterprises, India Mobile. But focusing on the pure India Mobile business, the numbers are in line. The company has reported a top-line growth of 2% ahead of estimates, though slightly lower than what Jio reported. Margins are absolutely steady at 55.1%. The big positive surprise was the increase in the number of subscribers. The company has added 6.7 million subscribers on a quarter-on-quarter basis, though the ARPU increase was a bit insipid. Consolidated numbers, though, were lower than street expectation on expected lines because the Africa business was weak and they reported numbers last week on the back of the Naira devaluation. But purely looking at the India mobile business, these are, very steady set of numbers and fairly robust. Now, talking about Bharti Hexacom, this is the first result since the company listed in April, and the stock has, skyrocketed. Issue price was 570 and the stock is closer to 900 rupees. Steady numbers, 3.7% top line growth quarter on quarter. Year on year, it's inching towards an 8% growth. Margins have improved by 100 basis points sequentially, and profit growth too has been steady. Subscriber ads and ARPU too have improved on a sequential basis. Back to you.
Okay, thanks a lot for that. Well, Shree Cements is the other one that reported a very good set of numbers. Nigel is here to give us the lowdown. Nigel, over to you.
Well, that's right. Shree Cement's numbers were very, very good, Sonia. The EBITDA per ton increased marginally on a sequential basis. Most of its peers had reported a decline. How was this possible? Well, a couple of factors played out. For the time being, let's run you through the basic numbers. Revenue is higher, EBITDA was higher, margins were higher. Why was the top line beat? Because they sold higher volumes than expected, closer under 100,000 tons. So that's point number one. The second factor was the realization decline was only 3%. The street was bracing for a number of 5 to 6%. We'll require clarity over here because they don't give their power revenue separately, and they've not given how much over the premium product sales as well. So we'll require some details on that front. But because of higher volumes and lower contraction in realizations, we did see a top line beat. The EBITDA beat as well did come into play because it's flowing in from the top line. Operating leverage played out, and besides that, the power and fuel EBITDA per ton was down by close to around 15% on a year-on-year basis. The management has said for this coming year, they have close to around 4,500 crores of capex has lined up, which takes their capacity to around 65 million tons. Keep in mind, they're sitting on cash of more than 6,000 crores odd. So it's a good set of numbers. The only problem is we wait by for clarity on the income tax rate that took place last year. And the second factor is valuations have not been cheap for Shree Cement, and it's never been cheap. So those are the only problems. In fact, we'll chat with the management at around 9:30 a.m. So we'll get you further clarity at that point of time. So Shree Cement is a stock that reacts positively. But the other one that will be reacting well is Siemens. Vamakshi, tell us more.
Well, absolutely. The company reported a very strong set of numbers. It's a beat across the board. The positives this time around is the revenue. Revenue has seen an uptick of almost 18% YOY. It's come in nearly 4% above our own expectations. And in fact, this growth is being seen across all the segments, including smart infra, digital businesses, digital industries. Apart from that, when we look at the margins also, they've come in much higher than what we were expecting at 15.3%. And the net profit has also come in nearly 41% higher than what we were expecting, and this is largely being driven by volume as well as price effects as well as continued productivity measures. So a large chunk of the improvement in profitability seems sustainable as far as the company's commentary is concerned. But apart from that, the management also highlighted that the government infra spend looks quite robust, and private sector capex is just starting to pick up. So again, that's another positive, and in order to capitalize on this, a total capex of over 1,000 crores is what the company will be doing over the medium term. They've announced additional capex of 333 crores for expansion in Goa and 186 crores for setting up a train manufacturing facility in Aurangabad. Apart from that, the other announcement is with regards to the demerger. They've announced that the company will demerge its energy business into Siemens India Energy. Apart from that, the miss, however, this time around was the new orders. They were down almost 9% 4%, and this is mainly on account of a deferment of some large orders as well as slowdown in ordering of industrial automation products due to channel destocking. But nevertheless, overall, it's a strong set of numbers. The demerger announcement as well as the capex announcement could lead to the stock opening higher today.
Right, Makshi, thank you very much for that. Stocks, of course, have done some 70% this year, right? Along with ABB, it's been a huge outperformer. Colgate reported numbers as well. Mangalam has got that set. Mangalam, morning.
Good morning. So Colgate, good set was expected. A company reported an even better set. In fact, the margins of the company have been at a near all-time high. In fact, the all-time high for Colgate in terms of the EBITDA. Revenue growth of 10% was expected. The company reported a 10% growth out there, 1490 crores on the top line. The EBITDA 532 crores versus our poll of around 515 crores. That meant the margins at 35.7% were above expectations as well. And that's flown down to the bottom line with a growth, net profit at 380 crores versus expectations of 365 crores as well. Why is it that the margins improved? Because of the price hikes that the company took and also the product mix. Gross margins improved by 240 basis points. And the margins are at a record high despite the company actually spending a little more on advertisements as well. 11.3% is what they spent as against 10.6% earlier. Commentary was fine as well. They said that rural markets continue to exhibit positive signs of consumer demand recovery. It's better than the urban for them, and that accounts for nearly 40% of their sales. Growth momentum in the fourth quarter came in on the back of strong performance in their toothpaste vertical. And more importantly, from a portfolio standpoint, they will get some more variants from their global portfolio into India and also have launched some new variants of Palmolive, a business which is likely to grow at 2x the company's overall sales. And they're optimistic that this year would be a good one. So see some green on Colgate.
Okay, thanks a lot for that. See some green on Colgate. Apollo Tyres is the other one we're tracking. I'm going with red over there because the entire tyre space has seen very slow growth this quarter. But Apollo Tyres particularly has seen the slowest growth amongst its peers. So let's take you through the numbers. It was a miss both on revenues as well as on margins. It was the low single-digit growth that the company saw on the top line. If you can see over there, it's barely a 0.2% growth on the top line. The EBITDA is up just about 3%. The EBITDA margins are absolutely flat. And it's actually a fall in their net profits that they've seen this time because of the EPR provisioning that a lot of these tyre companies had to make, which is the extended producer's responsibility provisioning. These are requirements imposed on the tyre industry by the government of India, and that's the reason why you've seen that fall in profits. But if you just break up the segments, right, there's barely any growth. Europe has grown just about 1.3%. The Asia Pacific and the Middle Eastern region has not even grown 1%. So there's a slowdown across the board. And if you look at the peer comparison, Apollo Tyres has seen the slowest growth compared to its peers. Its revenue growth was just about 0.2%, while peers like SEAT and MRF at least saw 4 to 8% growth. So I'm going with red on Apollo Tyres this morning. But Mangalam is back with us to talk about Patanjali Foods and Radico Khaitan. Mangalam, over to you.
Well, for Patanjali Foods, the revenues grew just around 4.5%, but it was an operational improvement where the margins came in higher by about 50 basis points. And on a business that works on wafer-thin margins, an improvement in margins is definitely a positive. Edible oil volumes actually increased by 5%. The prices have been lower, which is what reflects in their revenues. But the revenue growth this time around was led by a record performance in their food and FMCG business, which increased by 49%. The key trigger for them, however, is that the board has formed a committee to peruse the proposal of acquisition of Patanjali Ayurved's non-food business, which includes their personal care business. So were that to happen, that would provide a fillip to their revenue growth, and as a result of which, this would be a big positive too. On Radico Khaitan as well, I'm going with green because the revenues have grown 30%, EBITDA has grown 55%, and net profit around 26.5%. While their overall volumes have declined by 1.2%, the prestige and above volumes have actually increased by 14%, and that accounts for about 503 crores in their overall revenue. They've given outlook for the next year as well, double-digit growth in their premium vertical in FY25. While they're monitoring the prices of raw materials, they will maintain ad and sales promotion spends at between 6 to 8% of their sales. Strong performance from the premium end of Radico Khaitan, hence I see green on both.
Okay, all right, Mangalam, thanks for that. Well, let's go across to Sonal. She's here to tell us about Oberoi Realty. Sonal?
Good morning, Nigel. Well, let me start with the P&L first because they've been able to recognize a lot of projects in this quarter because of higher sales. Revenues were up 37%, EBITDA went up by 7%, margins came in at 45%. They were lower on a YOY basis, but profits went up by 64% to come in at 788 crore rupees. Their total operational performance was higher on a quarter-on-quarter basis, and it was led by newer launches that the company made. Their total units booked, the booking value and collections as well, all of them were up on a quarter-on-quarter basis, and that was a substantial increase as well, led by the newer projects that the company launched. The board members, additionally, they have passed an enabling resolution to raise funds via QIP up to 2,000 crore rupees. So going by the numbers, it's a positive. Expect a green tick on the stock today. Okay, expect a green tick on the stock. That is an Oberoi Realty. Thanks, Sonal, for that. Here's a quick recap of our top stocks in focus. Stocks with positive news flow. There's Bharti Airtel, Bharti Hexacom, Shree Cement, Siemens, Colgate, Patanjali Foods, Radico Khaitan and Oberoi Realty. While stocks with negative news flow, there's Cipla and Apollo Tyres. But let's quickly take it across to Manisha Gupta. She'll give us a roundup of all the action from the commodity markets overnight. Manisha, good morning.
Morning, Sonia. Thank you. I want to first focus on crude prices, which are holding firm. And today is the third straight day of gains coming in here. There are signs of strong demand from China. There are supply disruptions due to wildfires in West Canada. Also, decline in U.S. inventories, not just in case of crude, but gasoline and distillates tells you that the physical demand on ground seems to be picking up, especially ahead of the summer demand season. Also, OPEC monthly report yesterday suggests that they are keeping on with their expectations of world demand for this year and the next as well on the positive side. So that led to some buying here. But the good buying clearly is seen in case of metal prices. And here, while the LME copper is trading at a 2-year highs, it's a record high in sense of copper in New York, in Shanghai, and in the Indian markets as well in sense of prices. Well, the trends are bullish, especially the long term. There are tight supplies concerns in the market right now. We have seen copper inventories globally continue to decline, and China imports have been rising. So it's a complete recipe for the copper bulls to continue strong here.
All right, Manisha, thank you very much for that. So, yeah, I mean, it's yesterday was a big day for metal stocks here in India, right? I mean, Nalco, Vedanta, so many of these stocks, steel stocks, of course, there are individual results-related reactions as well, but I think there's a broader sector tailwind which is at play here. We'll talk more about metals and other sectors. We'll take a break here. Deven Choksi, Managing Director at GR Choksi FinServ, will be joining in on the other side. Stay tuned.
Welcome back to Bazaar Morning Call. Well, let's get Deven Choksi into the conversation now to discuss a lot of numbers and some themes which are playing out very well, though. So let's take it straight to him. Deven, hi, good morning. I wanted your thoughts first on Siemens. Very strong set of numbers coming through. Margins have expanded. The board has now approved the demerger of its energy business into a separately listed company. So that added advantages there. I wanted your thoughts on, for people who've missed out on the rally in Siemens, is there still more to go?
Well, I think good morning, Sonia. Well, I think the valuations are absolutely at peak currently in most of the stocks which we are talking about. And that could be one of the reasons for which I think little reserved opinion at this point of time in buying afresh into the capital goods segment in particular. Undoubtedly, I think this particular segment is going to experience significantly large amount of business for next 10 years. However, I think the point here would be that at what level one should be buying into. In my understanding, I think currently the bigger amount of tailwind is also the allocation of funds into these sectors. And as a result of which, I think we are seeing the higher amount of participation, particularly from passive funds. That's not a very good sign, particularly for me, because I think when you are seeing the participation coming in from passive funds, they are basically momentum driven. And when they get out, at that time, I think it is the best time for investors to buy into those stocks. So maybe given the stretch valuation currently, I may wait for a while before I consider a fresh. At the same time, the holding in the portfolio of the existing stocks, I think, will continue. That will not get shared or parted from the portfolio at this point of time.
Okay, all right. Hi, Devin. Good morning and good to see you win. Devin, what about Shree Cement? Beautiful set of numbers out there, and the EBITDA per ton continues to trade above what Ultratech as well is delivering. And on a sequential basis as well, there was no decline. Your view on the stock, the problem for Shree Cement is the numbers are very good, but valuations are elevated, and there is still that overhang of what's going to come out of the income tax, query that came out to them. How would you approach the stock?
Yeah, Nigel, good morning. Well, I guess I think cement in general looks, I think, very appealing and absolutely convincing. On one side, most of the companies have been expanding their capacity, so they are getting the volume-led advantage in respective period of time as far as the numbers are concerned. On the other side, given the kind of controlled input cost, the energy cost in particular, is basically suggesting that the value, the margins are on a positive side. Impact on the margin is on the positive side. Along with that, the demand continues. So I think typically the January to June period in a particular calendar year is a good period for the cement in general because of the projects which are basically required to get completed before monsoon. They would keep demanding higher amount of volume at the same time. So all in all put together, I think likes of Swiss Cement, likes of Ultratech, even ACC Ambuja, where the capacity is on their side, they are relatively looking much promising, much better. Even some of the regional players like Ramco in Southern Belt definitely, I think, appears more promising at this point of time. You are right on the valuation side, but that is a general problem with the entire market. Significant amount of cash is available into the system, as a result of which most of the stocks are quoting at a valuation which is not cheap. And that's where probably I think one would like to buy when the market gives opportunity at a moderated level, at a reasonably good level to enter into.
I want you to just sort of, Devin, morning, pull up these names, right? I mean, these intradays, and you'll see the kind of action we saw yesterday. And Devin, I want your comments. PSUs was basically red hot. So if we can have these up, Cochin Shipyard, I'll just start with that. Big kind of mover. So, it's the point is many times momentum rotates from one place to the other. And yesterday, of course, PSUs did very, very well. NHPC should come up next. I mean, just quickly, if you can pull these up. IRFC, I mean, if you'll be able to see what I'm talking about. There is Hudco, which went up sharply. RVNL was up, big time. EIL. And across the board, I mean, doesn't matter one or the other. IRCON, it was sector agnostic in that sense. IRDA, Railtel, Bharat Dynamics, Garden Reach. So it was, railways, shipbuilders, infrastructure, all kinds of names which went up on very large volumes. Actually, the single largest volume traded sector was the PSU space. So, Devin, just wanted your thoughts on what happened yesterday, and do you like anything here? And any way to play this? Momentum begets momentum, as they say. Gains beget gains. But your thoughts?
Yeah, Prashant. Good morning. Well, I think the last week the challenge was that one of the large hedge fund probably had to unwind their position, which was long position in PSU and short in the FMCG. So I think that unwinding took place. FMCG moved up, PSU came down. And it was a significantly large portfolio, I think, which probably got offloaded and spread up. So the market had a sharp fall. However, I think the bulls are in no mood to give up the kind of a momentum into this particular stocks, largely because of the fact that 2 3 areas are working. On one side, the PSUs are basically going to be attracting larger amount of investment. Also because of the fact that continuity of the government post-election would mean higher amount of business continuity for them. And that's where probably I think the one school of traders believes that it is good time to buy when the stock has been hammered down for other than the fundamental reasons. The second part, of course, is the liquidity. I think the liquidity in the system is so huge today that I think where to allocate money is a challenge for the fund manager at the same time. And that's where I think whenever you see any particular stock beaten down, I think immediately there are people who are buying this stock into the market. I don't think that the PSUs are to be neglected, but at the same time, I think chasing the momentum is not something which I am always very comfortable with. So we will, I think, selectively staying invested in some of the select names but not across the board for the PSU space.
Okay. The other thing, Devane, that we realized in this earnings season is that the rural demand seems to have come back in a big way, right? Whether you talk about it across the board, I mean, if you look at Hero MotoCorp, Colgate, the margins were at all-time highs, Dabur. In fact, even HUL said that they are seeing green shoots of recovery in the rural markets. So from this entire rural focus theme, which are the stocks where you still see more gains now?
Yes, Sonia, I think each of these companies where the consumption pattern is emerging stronger, I think they are relatively remaining on a preferable kind of a outlook as far as individual portfolios are concerned. Take a case of HUL for that matter, or take a case of, I think, Britannia for that matter. I think all these companies have two things in particularly common. One, they have the one side advantage of contained input cost, which is suggesting that the margins are relatively more protected than before. On the other side, I think the rural demand is increasing and increasing in a higher of the single digit. So definitely, I think this is a good sign because of the distribution reach that these companies have created over a period of time. But everything is in price. Again, I must say, I think that today, even though they look, I think, promising, everything seems to be in price to me at this point of time. Most of the things are driven largely by the liquidity and the momentum. So that is where one will have to be a little bit watchful about. If we are holding the stock, we continue to hold. Within the discretionary spending, I think we continue to remain bullish more on in the area of, as you mentioned, two-wheelers. We find, I think, that is one space, I think, which will continue to give higher growth. Maybe, I think, in the festive season and after post-September would be, I think, the interesting time to watch out for. So the quarter, July to September, would be a typical quarter in which I think some of the two-wheeler companies, even the passenger vehicle business of Tata Motors kind of companies or Maruti for that matter, should be seen a good amount of buying attracting during this July to September period in the portfolio of the investors. When I think these stocks are comparatively likely to be available at comparatively lower prices.
All right, Devin, stay with us. We'll sort of talk more about individual sectors, etc. But MSCI has announced a list of additions, deletions as part of the May index review. Vivek is here with the list of changes and how that affects markets and stocks here. Vivek, morning.
Well, good morning. Long awaited. A lot of it, has already been priced in, given the fact that quant analysts have already made their list almost a month and a half in advance as to the anticipated, additions as well as deletions. No major surprises. HDFC Bank weightage continues to remain out of the purview as of now. Now, what actually happens is that India's weight, as far as the MSCI Emerging Market Index, increases up to 18.8%, and in this particular May region, which will happen at the end of May, India will see net cumulative inflows of close to $2 billion. So that's a sizable number that comes in as far as India is concerned. Now, as far as the MSCI India Index is concerned, which is part of the Global Standard Index, the one that will see the maximum amount of flows as well as impact, there are 13 additions and 3 deletions. So the additions are Bosch, Canara Bank, Industar, Jindal Stainless, JSW Energy, Mankind Pharma, NHPC, PB Fintech, Phoenix Mills, Solar Industries, Sundaram Finance, Thermax as well as Torrent Power. On the other hand, the deletions from this particular list are Berger Paints, Indraprastha Gas as well as Paytm. Now, along with that, as far as the MSCI India Small Cap Index is concerned, there are 28 additions as well as 14 deletions. There is a bit of confusion as to Force Motors as well, because MSCI has apparently made an error. It's both in the list of additions as well as deletions. So I'm awaiting some clarity on that particular name.
Okay, all right. Thanks a lot, Vivek, for joining in and giving us all of those details. Well, let's talk about the metals pack, right? Because yesterday that one was on fire. Ferrous and non-ferrous did very well, and you had individual stocks that were reacting to their new species as well. To help us out with an analysis, we have Vikas from Phillip Capital who joins us. Hi, Vikas. Good morning, and thanks a lot for joining in. Well, before we talk about what's going on with China, demand and supply issues, last night you had, tweet coming in from the Biden government where they're talking about tripling the tariffs, on steel as well as on aluminium. I was looking at the numbers, and as of now, anyways, the amount of aluminium or steel that gets imported into the United States from China is very minimal, 2 or 4%. How do you see this, and what could be the impact on the Indian listed companies?
Yeah, that's correct. So in CY23, the total steel which they imported was 550 KT, closer to only 2% of their total imports. And aluminium was closer to 200 KT, which is closer to 4% only. So effectively, if you see on a direct import basis, it doesn't impact much. But there was in the tweet there was EV and the solar panel was also targeted. So some indirect impact may come, which is difficult to assess. So overall, we are not expecting this to have a meaningful impact on the Indian perspective at this point of time.
Got it. So that gets cleared out of the way. Now I want to talk about individual stocks and particularly Vedanta. You know, you were in minority actually, Vikas, when you joined us, I think somewhere in September 2023. And at that point of time, people were fearing that, you know, will the company go belly up? Will they be able to make their payments? And you were the lone voice that said, no, I'm bullish on the stock and it's set for higher levels. The stock's done well, so congratulations. But what do you do from here? Vedanta's at around 430 rupees a share. And also they're looking at raising some money. So first the view on the stock, and why do you think they want to raise money?
Yeah, thank you, Najib. So we are still telling clients to hold on to the stock. Not the great time to sell. There are some further gains which we can get. Base metals are in rally and Vedanta is a pure play. So some more gains are yet to be derived from the stock. So we are telling people to hold on to the stock. Regarding the fundraising, they have a good plans across all business segments. So they said in the press release that they might basically. So my guess would be probably without stretching debt. If they do, then it would be with a view that without stretching debt, the capex across segment. And mind you that 2-3 days back, they bought the remaining stake in the display making unit as well. So probably they would go ahead with the semiconductor or the display making unit in India. So probably the cash for that.
Okay. Vikash, hi, good morning. I take your point on Vedanta there. What is your view on some of these PSU metal stocks? I know we've discussed this in the past, but names like Nalco, Hindustan Copper, NMDC, Coal India, from here on for the next 12 to 18 months, what are your thoughts?
So in PSU, basically, we are still bullish on Coal India, though we don't have the rating on that. NMDC is still, we think that structurally they are going into a very good scenario. FY26 onwards, we would have almost 40 million tons of steel operating additional new capacity, for which you would require a lot of iron ore. So iron ore, basically on the domestic front, we are gradually moving into a structural good scenario. Hindustan Copper, we will refrain from giving any comment because we don't have any coverage on that. And Nalco, like I said, that the alumina is on a boil. And aluminium next year, we are thinking that probably would be in a deficit. So for some more gains, people can continue to hold.
Vikash, hi, morning. Prashant here. This morning, there is a newspaper story which essentially is talking about the risk of the threat of Vietnamese steel. I don't know if you saw that story, but essentially they're saying that this company, this Vietnamese company, has been given a license once again, and sort of comments from sort of not quoted specific names here, but players kind of saying this could be a risk with a lot of steel coming in from Vietnam. Your thoughts, if that is a risk at all, how do you see this?
So yes, that Vietnam Pofat basically got the BIS certification last Friday. Basically, the way we understand that the certification is applicable till December this year to them. Already we have seen a little bit of higher inflows of metal. So basically, but we have exported as well. So if you look at the net level, we imported a little over 9 million tons and exported closer to 8 million tons. So just 1 million ton net imports have come, which at 136 million tons of steel demand in FY23 comprises not even a 1%. So in the near term, basically, yes, we are not that much worried about the imports at this point of time. We think that barring this election phase, our demand would remain strong, 7 to 8% kind of the growth. And that would basically, there's a further leg room of another 1 million ton of imported steel. From the perspective that most of the capacity which would be coming in the second half, basically. So the ramp up takes time. So with a 7 to 8% demand growth, basically we would essentially require 9 to 11 million tons of steel. So additional 200, 300 KT if it is coming, which would get consumed in India.
Got that. Thanks for clearing the air on that front, Vikas. I also wanted to ask you about Vedanta. They also will be considering dividend. Are you factoring in any big dividend for the coming meeting, which is scheduled tomorrow?
So they will pass on the Hindustan Zinc dividend which they have received and probably add some more. So basically, yes, probably the dividend story which was halted last year would take again restart, because at the end of the day, Vedanta Resources has only dividend incomes as of now, and they will still need $1 billion to service it. So that would come. So yes, this year also we are expecting at least overall 30 rupees kind of the dividend.
Very quickly, Hindustan Copper, would you be still bullish on it? It's the lone copper play, or would you avoid it at these levels?
So we don't have rating, but copper prices last night have jumped up and reached in the COMEX almost $5 a pound. Basically, it's a historical high. So being the only copper concentrate producer in India, definitely Hindustan Copper is going to benefit, because even if you look at the 1 month's perspective, the copper price has rallied roughly about 11%. So obviously they would benefit, but in terms of valuation, etc., we will refrain from comment.
Okay, all right. Thanks a lot, Vikas, for joining in and clearing the air on a whole host of issues on the US tariffs, on the imports coming into India, and on Vedanta as well, which has been one of the big picks that you had. For the time being, we'll slip into a short break. You come back, we'll get you some technical picks coming in from our experts.
Welcome back. There's 7 minutes to go for the pre-open session. Mitesh is with us, and so is Sudarshan Sukhani with what they're making of the market. Gentlemen, good morning. Good to have both of you here as always. So decent follow through yesterday, Mitesh, and although the market did give up about 50 points from the highs, how are things looking? Would be able to sort of hold if we get a 50-point higher start, build on it, or you think it's going to look a little jittery and nervous?
Morning, Prashant. So I think the most important thing was that the Nifty managed to get past and close about 22,200. One. Secondly, this is the third time in the last about 8 odd weeks that the Nifty has taken support around 21,800 levels and bounced back from there. So for the timing, at least the short-term setup, which was slightly in the negative side, has been taken care of. Closing about 22,200 was positive. I would expect this pullback or the up move or the upward grind to continue to about levels of 22,400 odd levels, maybe 22,500, 520. These are the levels we are watching for. We don't have a signal of a strong up move or markets willing to make a new high immediately or as yet. So I think for the timing, we'll keep a positive bias, but with a limited upside kind of a signal.
Okay, Sudarshan Sukhani is also with us. Sudarshan, the pullback seems genuine, at least for now. I mean, holding on to this 22,200 mark. Do you think we can build on to it? And if yes, what is the order of the day? What are the stocks that we should be looking at?
Sure. Good morning. Well, yesterday I had suggested that we have probably made a short-term low and we should go long intraday. Luckily, we had a big range intraday, which means not just the gap, but a big move during the day. That worked well. Now I'm upgrading my signals to say that we can also carry positions in the Nifty. That means I'm looking at a significant, or let's say a reasonable upside with some gaps favoring us on the long side. So to your question, yes, it does seem that the low is made, at least for the time being. It's all temporary. And then we are looking at a rally where gains can be built upon. For today, look to buy the Nifty on a morning breakout. Wait for 15-20 minutes. If you see the momentum on the upside, don't wait for a dip, just go long. The Bank Nifty is very interesting. It is ready and ripe for an increase in volatility. Now, given the fact that the market is upbeat, if you see an increase in volatility on the upside, if you see the Bank Nifty breaking on the upside, go long in the Bank Nifty, it could be a good trade. Essentially, be a buyer. And now for the stocks, sorry.
Yes, please go ahead.
Yeah, Adani Ports is a buying opportunity. Buy with a stop under 1240. HAL, Hindustan Aeronautics, is a buy with a stop under 3800, and there's a disclosure. I also own some shares in it.
HPCL is the only intraday short with a stop above 533, and TVS Motors again is coming out of a small correction buy with a stop under 1972.
Okay, Mitesh, what about you?
I have all buy calls today. BEL is a buy with a stop at 226 for targets of 242. Bosch made a fresh swing high, so buy here with a stop at 31,300 or 250 and look for a 33,000 kind of a target. A buy on NHPC with a stop at 96 for a first target of 105. And Biocon is a buy with a stop at 305 for targets of 330.
Mitesh, there's only one PSU name. Yesterday we had some 10, 15 of these move up in tandem.
So, a lot of calls, Prashant, were fired yesterday, so I've got new names today. But I think I like the PSU spaces. There's no doubt.
Right. And metals was the other. I mean, sectorally, metals was the big mover, Mitesh. Anything there?
Yeah. So, in fact, we had a buy on General Steel and Power yesterday. Made a very strong, fresh high as well as closed the day near the day's high. So, very strong pattern over there. That apart, Hindalco and Nalco are two stocks which interest me. I think Hindalco is showing signs of getting past the 655, which was the earlier pivot on the upside. And once it does that, 680, 690 is my near target. While National Aluminum, I think that's also looking very positive to me. And I would look at a target of around 200, 205 over here.
Okay. All right. Thanks, gentlemen. We'll come back to you for more. But for now, thank you for all of these calls. We'll step into a quick break. On the other side of the break, we'll have the pre-opening rates. Also, Balaji Subramanian, who's the Vice President at IIFL Securities, will join in to put the spotlight on telecom companies. Stay with us. Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. Today looks like it's going to be a good day, but you never know. I mean, these days things are all over the place, right? Rajesh Palvia, Vice President, Technical and Derivative Research Head at Axis Securities is with us. Rajesh, this is a market that is pretty much like a roller coaster, but what do you do now and what are the stocks to look at today?
Good morning, Sonia. Yeah, a lot of volatility is happening in market. We have registered a low of around 21,800. And again, we have seen a very strong pullback from those level, almost 400 point pullback from those level. Nifty and Bank Nifty both were slipped below to 50-day moving average. But again, looking at the recovery, we believe that, this momentum can extend further. Now again, Nifty and Bank Nifty has almost taken the support from its 100-day moving average and now almost negotiating to its 50-day moving average. Looking at the broader market, looking at the open interest data, most of the put writers now again, back at 22,100, 22,000 strike. So that clearly gives us confidence that, on the lower side, 22,100, 22,000 are likely to act as a good support area. For Bank Nifty, again, 48,000 is the immediate challenging level. If we are able to take out 48,000 level on Bank Nifty spot, then there may be a short covering rally we can see in today's session also, and a possible rally can extend to 48,400, 500 kind of zone. So 48,000 needs to watch closely in today's session. But still, looking at the recovery, we are holding bullish view for Bank Nifty also at this moment, as we are holding above 47,600. So till these levels are intact, one should remain on the long side of trade. For Nifty, we are initiating here to buy 22,200 call option. Looking at the derivative data, we believe that, these range.
I can't hear anything. Rajesh, I think there's some issue with your audio. So we'll just come back to you in a bit. But in the meantime, telecom major Bharti Airtel reported its fourth quarter earnings yesterday. The India business met estimates while the consolidated numbers were a miss because of a weak performance from the Africa business. Balaji Subramaniam, who's the Vice President at IIFL Securities, joins us now to talk about that. Balaji, good morning and thanks for joining in. The India business has been growing very well, not just for Bharti, but for almost all the large players in this sector. But for Bharti Airtel particularly, what is your expectation as far as subscriber additions are concerned? Do you think they can build on to what they did in this quarter? And also, what's your view on the stock?
Good morning. Thanks for having me on the show. Bharti's India performance was quite healthy. It continued to maintain its momentum. Especially the subscriber additions were a bit stronger than what we saw in the preceding quarters. And even if you look at the internals, be it postpaid subscribers or 4G subscribers, so it was a pretty healthy performance. I think going forward, the subscriber addition momentum should continue to some extent, but I would think that ARPU would be a bigger growth driver for Bharti rather than subscriber additions. And as far as the ARPU is concerned, I would expect a pretty significant tariff hike sometime sometime later this year, maybe post elections. So that should result in ARPU and ARPU and revenue growth remaining strong.
Balaji, hi, morning. Prashant here. Yesterday there was that story which said expected 25% increase in your phone bill. So when you say substantial increase, something to that magnitude?
So, I don't know whether, over what period can, this 25% increase in the phone bill happen, but I think something like 15 to 20% headline tariff increase is looking, quite plausible, especially, in the second half of this year. Of course, there would be some down trading, but, net, I think the industry revenue should grow in somewhere in the mid-teens or even high teens for FY25. And 25%. See, I think one way to look at it is that the industry ARPU, or even Bharti's ARPU for that matter, it used to be around 195, 200 rupees way back in 2016, and 8 years have passed, and even today it has barely touched 210. So that would probably be, in terms of real terms, ARPU has significantly come off, and mobile subscriber revenue as a percentage of consumption expenditure, that has also substantially come off. And even if one were to assume a 25% increase in the phone bills, I think, it should still be well short of where we were 8 years back.
All right. Hi, Balaji. Good morning and good to see you in. Nigel on this side. I want to ask you about the other Bharti. That's Bharti Hexacom. It reported its results. From the time it's listed, the stock has just rocketed. At around 900 rupees, what do you do with the stock?
I'm afraid I won't be able to comment on Hexacom.
Okay. All right. Then in terms of preference, because even Bharti Airtel, the stock has seen a big run in the last 1 year or so. How do you approach the stock?
So I think in the near term, there should be, a flurry of positive developments. So first is the likely increase in tariff, which might happen in the next 2 to 3 months post-elections. And the next could be, what happens on the AGR dues. Because if you recollect, in October, both Bharti and Vodafone Idea had filed a curative plea against the AGR verdict, and if the Supreme Court, kind of permits the DOT and the telcos to do a reconciliation, that can be positive, because if you recall, what happened in 2020 was that when the telcos did self-assessment, their own dues were about 50-60% lower compared to what DOT had served them with. So, if there is a positive development on that front, that also should help the, that should also support the stock. So I would say, the near-term outlook is, fairly positive, even though, I would also concede that after the significant rally that we have seen in the last 6 months, a part of that optimism is already built into the price.
The only problem, I think, is what's happening in Africa, right, Balaji? Because, there's a sharp devaluation of the currency, especially in places like Nigeria. So it's really hitting Bharti's Africa business. Do you think that would put a spanner in the works for the stock, or is the India business far outpacing the Africa business, so shareholders shouldn't be that concerned?
See, I think if you look at Airtel stock price, the rally has happened despite all the issues in Nigeria. Because in Nigeria, what has happened is a year back, the currency was at around 460 to the dollar. And today it's almost at 1400 to the dollar. So that is a massive devaluation. And of course, that has shown up in the Airtel Africa numbers also. But Bharti Airtel stock has remained resilient during all this because of the underlying momentum in the India business. I think, with all these developments, Nigeria has become a substantially smaller proportion of the overall business. And let us not forget that Bharti Airtel owns only 56% of Airtel Africa. And considering all that, I think the value of the Africa business is less than 10% of the overall consolidated valuation. So my sense is that, despite the trouble in Africa, the strength in India should more than offset the weakness there.
Okay, that's a fair point. So Africa is less than 10% of the overall business. So at least for now, you don't need to give too much attention there. Strength in India far supersedes that. Just two quick questions before we let you go, Balaji. One is on the stock price, right? It's already seen a 40% rise in the last 3-4 months. How much more of an upside do you think you can see in the stock, or have we reached a mature stage of the rally? And the second is, there's a little bit of a niggling concern about the rising debt of Bharti. The debt is now, I think, about 20,500 crores. So would that be a concern for you?
Okay, so firstly on the stock price, as I said, the near-term news flow should be positive. One on the tariff hike front, and the other one potentially on the AGR judgment. So those two positive developments should support the stock price. Even though I would think that a significant part of the rally is already done. Finally, on the debt. See, the thing is, if you look at their net debt to EBITDA ratio, it's around 2.6 times, and that has been, it has. So the thing is, it has been steadily falling, and in the last couple of quarters, that fall has not been that much because of the fact that there has been some, EBITDA has been flat at the overall level because of the issues in Nigeria. But if you look at the FCF generation, it has been pretty strong for Bharti, and as we see tariff hikes in future, a significant part of that should flow through as EBITDA. And I think the peak capex year is already behind us. FY24 saw a significant increase in capital expenditure on rural 4G rollouts and 5G rollouts. But in FY25, that capex number should also come down. So a combination of EBITDA growth and a reduction in capex should ensure that the FCF generation substantially improves from here on. And that should mean that the net debt to EBITDA ratio also should fall pretty quickly.
Okay, all right. Balaji, we'll leave it there. Thank you very much for your time. Great speaking with you, and I really appreciate you coming on as always. Now, I just want to point out, and this is something which has been highlighted by investors who've come on the show, about how for some of these capital market plays, any upcoming regulation actually, especially on the futures and options side, could be a bit of a worry. So we, for example, had the SEBI chair earlier over the last many months. She's sort of talked about, how retail investors should be sort of more careful. In the F&O segment, there was that famous study which was released by SEBI, which showed that a large percentage of the people who actually trade in F&O end up losing money. And yesterday we had the finance minister, no less, Nirmala Sitharaman, here in Bombay, who warned that any unchecked explosive increase in retail F&O trading can create challenges for investor sentiment as well as household savings. She was speaking, as I said, at an event at the BSC. I just want to quickly play out that soundbite.
It's a precious trust which Indians have got in the stock markets. It's very, very precious for all of us to guard and build. I would appeal to this BSC that you should work closely with the SEBI in order to ensure stringent compliances and robust regulatory standards so that further investors' confidence grows. Any unchecked explosion in retail trading of futures and options can create future challenges, not just for the markets, for the investor sentiment, and also for household finances.
Okay, well, you know what? We just have a couple of minutes before the opening kicks in. So let's go across to Sonal to find out why you should be watching the chemical space this morning. Sonal, over to you.
Well, UBS has written an interesting note and initiated coverage on a couple of these chemical names. They say investors may be ignoring the Indian chemicals company's strong niche positions and growth opportunities. The industry right now is seeing the worst destocking that they've seen in the last 30 years. However, they are seeing some signs of modest recovery going forward. And Indian chemical companies, remember, they had scaled up their capex by 4 times from FY16 to FY23, and it will leverage them with specific opportunities across their portfolio. 2 years of underperformance reflects the sector's negative earnings momentum. However, this backdrop may drive stronger than expected performance given the modest cyclical uptick that the brokerage is seeing. And several indicators are suggesting improvement in volumes as well. So they have initiated coverage on PI Industries with a buy rating, 4,800 rupees as the target price, Naveen Fluorine with a buy rating, Aarti with a sell rating, and Gujarat Fluorochemicals with a sell rating and 3,000 rupees as the target price.
Thanks a lot for that, Sonal. Well, Shree Cement, the numbers look very, very good. The results are better than expected on a sequential basis. The EBITDA per ton came in higher, which is a rarity given what its peers did. The headline numbers, the revenue, EBITDA and margins as well did come much better than our poll. Why was that? On the top line first, because volumes are a little bit better than what we were working with. The second factor is the realization contraction was less than expected. And that could be partly because of the power contribution or maybe the focus on premium products as well. The EBITDA number as well did do better because of higher, premium sales likely, lower realization contraction and operating leverage that play out. In addition to that, the power and fuel cost was down by close to around 15% on a year-on-year basis on a per-ton basis. The management has laid out a capex of around 4,500 crores. They're going to be headed to around 65 million tons in the coming year. And Nomura, they highlight that for the third quarter running, Shree Cement's EBITDA per ton is better than Ultratech Cement, and that's why they maintain their positive stance.
Okay, thanks a lot for that. We just have a couple of seconds left before the markets open for the day. And, it looks like it's going to be a decent opening, but you never know, right? Things have been so all over the place. But one thing is that 22,200 could hold.
Well, hope so, right, Sonia? And I think the first rates are there. 22,270 is where we are at. So it's a good start for 50 points higher. I think we've had a 50-point higher start for 3 days in a row. And then, of course, things change. But 40 now, 43 now, 100 plus points in the sensex, 73,231 is where the sensex is now trading at. Mid-cap index is up 173, and you've got the small-cap index, which is also starting, I think, about 1/3% higher. So these are indices and how they are starting up. The SUs was, all the rage yesterday. So we'll kind of course, look at that. Metals yesterday, and, of course, lots of result reactions, some of which we highlighted as we started. So these are the indices, but it's all about stocks. Sonia's got those. Sonia.
It's all about stocks this morning, right? So we're going to begin with Bharti Airtel because there you have, good numbers. Q4 saw a very strong subscriber addition. A lot of brokerages, by the way, have raised their target price and earnings estimates on Bharti. So I have Jefferies with me. They raised their target price to 1,590 from 1,300. So Bharti is now gaining some ground, up almost 1.5%. But the other really strong set of numbers is Siemens. Just look at the move here. It's raging this morning, almost 9% higher. Not only have the margins expanded for Siemens, but the board has approved a demerger of the energy business into a separately listed company. So there's more shareholder value being attributed by the company. Great decision, at least that's what the street believes. And the stock is up almost about 8%. Remember, Siemens is also up 50% in the last 3 months. So despite the rally, we've seen build on to its gains. Shree Cement is the other one. Strong earnings coming through. The stock is up about 1%. But I want to look at what's happening with Colgate, because after a while, we've seen a decent set of numbers. The rural markets seem to be coming back, but the stock is under a bit of pressure now, down about 1%. Margins were at an all-time high. Disappointing set of numbers for Apollo Tyres. Barely any growth in the revenues and barely any movement in the stock this time around. Cipla, there is an impending large block deal where promoters are looking to sell 2.5% stake via the block deal. So the stock is tearing now on the upside, up almost about 5%. Keep that in mind. Thyrocare, strong set of earnings is what Thyrocare has reported this time. Just look at that, 4% higher, and it has been gaining ground. Oberoi Realty is the other one I'm looking at this morning. You have EBITDA growth of 7% for Oberoi Realty, up about 2% on the stock as well. Dalmia Bharat Sugar, strong earnings coming through for that one. So let's take a look there, 0.5% higher. V-Mart Retail had a good set of numbers. And then you have some of these stocks. Okay, look at V-Mart Retail. I notice a lot of these players that are in the rural space are now picking up pace. So let's just get V-Mart Retail back up on board. There you have it, 5.5% higher on this one. Big move. Post a good set of numbers. And finally, Bosch, Indus Towers, Canara Bank are included in the MSCI index. So these are some stocks that I'm looking at this morning. But this is the main, focus area. 22,250 is what's holding. 46 points higher on the index here right in front of you. And I think this also, 2,000 stocks on the advancing side, which means that the pullback that we've seen over the last couple of days is something that's holding for now. Nigel, over to you.
Well, Sonia, just take a look at a few stocks that I'm looking at. Thyrocare came out with a set of numbers late in the session yesterday. It's seeing some follow-through buying, a rank underperformer, good growth on the top line, margins as well improved. So that one is up close to around 4%. PB Fintech, that's another stock out there. It's holding with a gain, I think, of around 3%. Also, that's doing quite well. Sami Hotels, Shami Hotels should come up for you. That one as well is up close to around 3.5% in trade. So big up move is what you're seeing on some of these names. Salsa Technologies, well, that stock as well is up close to around 4% as we speak, and volumes are rather high on that one, so keep an eye out on that stock. On the flip side, Devyani, yesterday it came off a little bit from the top. Today as well, the stock is down close to around 2% or thereabouts. Sagar Cement, the numbers look quite disappointing. The only good news for them is they have valuation support, so that's why I don't think that stock is low. In fact, I think it's up close to around 1.5% or thereabouts. A fair bit of movers from the broader markets.
And absolutely, and it's a vibrant-looking screen as far as the broader markets are concerned, and there is actually a lot going on. Let me just quickly take a look at a few other movers and shakers. So I'll just look at a few volume-led gains, right? Look at Thermax. I think we pointed that out, and the results came, of course, day before yesterday. We had the management, actually before that, and we had the management day before yesterday, 9.5% on Thermax. It's the second biggest volume-led gainer. And of course, the number one gainer is Siemens, as we've been highlighting. JSW Energy is at the number 3 position with volume-led gains, 4% on JSW Energy. There is Policy Bazaar, which starts with a 5% pop. I saw an upgrade from one of the brokers yesterday. And there is, of course, another insurance company which the IPO is open today. That is Go Digit Insurance. So that's some news flow from the industry. Bharti Hexacom, 4%. Rima, of course, highlighted that earlier. Barmer Lorry is coming up with a 4% pop. You don't usually see that with the top volume traded list here, but it is. V-Mart is up 5%. We'll be speaking with the management of V-Mart on numbers and outlook going forward. So 2,300 there nearly on V-Mart. Repco Home Finance, South-based lender, and 6%, 500 plus on that one. Swan Energy is up about 4%. So there is a lot happening in the broader market with lots of volumes as well. On the downside, Cochin Shipyard is pulling back a little bit, but it was a big move yesterday, a 10% move, so it's just some profit booking. DLF something similar with a 2% odd cut there. And you've got Apar Industries and Aarti Industries, which are down about 1.5 odd percentage. Bosch is down about 2% or so as well. So that's the list, but 30 points on the Nifty to show for it.
I know we've spoken about this ad nauseum, but Thermax is really the one that's surging this morning. If you pull up the Thermax stock, right, look at that, 11% higher now. And the management has indicated that they will continue to be debt-free at all levels. So apart from the fact that the business is growing very well, the balance sheet has improved substantially, debt-free. Export business is going to be growing as well. So, this is one stock that the market definitely likes.
Absolutely. And the big one, right? It's a big name, well-owned institutionally, etc. as well, but not stopping it right now. Pratik Gupta is with us, CEO and co-head Kotak Institutional Equities. Pratik, good morning. Good to have you with us here. Thank you for your time. Prashant, this side. Just first sort of provide us with some feedback, because, you're talking to clients on the institutional side, and mainly on the foreign side, if you can provide that. What are you hearing? This selling that we're seeing, what is that? What is this on account of? What's the dominating driver behind this?
Yeah, hi. Good morning, Prashant. Thanks for having me. I guess as far as the foreigners are concerned, from their perspective, a couple of factors to keep in mind. First and foremost is most global emerging market funds, they're not really getting fresh inflows. US interest rates are still holding up high. You're seeing China, the Chinese markets have started recovering in the last 1 month or so. Just for example, the Hong Kong market, Hang Seng, is up 15% in the last 1 month compared to our market, which is relatively flat. And also there's some the usual concerns about India's expensive valuations. The Nifty, for example, is trading at about 20 times 1 year forward earnings. And that's actually prompted a lot of folks to take some money off the table. And lately, I guess in the last, say, week, 10 days or so, all the various media reports about some nervousness around the election outcome, which, although in the last few days it's sort of abated a bit, but nonetheless, there is some concern that one never knows with elections how they go, so why not take some money off the table? So combination of factors, along with the fact that by and large, barring a few stocks here and there, the earnings season has been a bit of a mixed bag. We're not seeing massive earnings upgrades to justify the high valuations. So it's just a little bit of, profit booking and taking money off the table, just at the margin, investing in other markets like China or Japan, ASEAN to some extent. So it's just a mix of various factors, no one single reason.
Okay, mix of various factors, no single reason there. Pratik, hi, good morning, and always great seeing you. One pocket that is coming back in a big way, and we've been discussing this through the show, is the rural plays, right? So even this morning, you've had Colgate come out with record high margins. Most corporate earnings that have exposure to rural markets, whether it's Hero MotoCorp, Dabur, HUL, all indicating that there is a recovery in that pocket. Is this a good theme to play over the next 12 to 18 months?
Yes, we think from a slightly longer term perspective, this makes sense. And you're right, in our conversations as well, when we speak to, at Kotak, we cover some 270 odd stocks. A lot of the rural focused companies are talking about some signs of they're already seeing a demand recovery or they're expecting a demand recovery. And hopefully we have a normal monsoon as per the weather forecast. So that should also help. So by and large, yes, we are beginning to see signs of an improvement. But I'd still say that as of now, most of it seems to be hope. We haven't really seen the full-blown recovery as yet, but the stocks are beginning to price that in. They've moved up a bit, but we think there could be scope for earnings upgrades in the next 12 to 18 months. So yes, we are positive on the rural focus themes.
All right. Hi, Pratik. Good morning and good to see you in. I wanted to ask you about some of these stocks actually that have been ranked underperformers, but very high in terms of pedigree, management. They have a good track record on a longer term. HDFC Bank, Kotak Mahindra Bank, HUL, all of them big underperformers, but it's hard to ignore them at current valuations. What's your view?
Yeah, hi. Firstly, yes, on the valuation part, that's the general feedback we get from investors. But bear in mind, it's really the foreign selling which has really been impacting some of these stocks. These were big heavyweights in foreign portfolios, all the stocks that you mentioned. And as I just mentioned a minute back, we have been seeing very heavy foreign selling in the month of May alone. In the first 12, 13 days, we've seen about 34,000 crores worth of foreign selling in the cash market. And obviously in April and earlier as well. So valuations have definitely come off, and that's something fundamentally a lot of these stocks are looking attractive. I can't comment on Kotak given I'm conflicted, but HDFC or HUL, etc. But equally, the questions that are coming up is what's the trigger? So in the short term, perhaps there's no immediate trigger, and right now there's a fancy for going down the quality curve, whether it's the banks or the FMCG companies. The quality is not doing as well. Value is in the short term doing relatively better. But if you're an investor with a 2-3 year investment time horizon, then we definitely recommend these stocks for investors with a slightly longer term horizon.
Got that. Pratik, do you reckon that flows will come back, foreign flows will come back in a big way post-elections?
That's a great question, Prashant. In our conversations with all the sovereigns and the foreign long onlys and even some hedge funds, One, I think a lot will depend on, one, obviously the election outcome, assuming there's a stable government, no negative surprise. Firstly, most of that is in the price already. No one's really expecting a major change in the political establishment or a major dramatic change in the policies of the new government. So that's point one. A lot of it is already priced in, and our valuations, like I said, at 20 times 1 year forward, we're already pricing in a lot of the good news. Having said that, in our conversations, we do come across a lot of global investors who just want this event risk to be out of the way before they come back to India. And obviously, we've seen some money being taken off the table prior to the elections, and we could see some of that coming back. I guess the more interesting question is, even if there is some money that comes back into India after June 4th, assuming the same stability of government and so on, is whether the money will come back into large caps or whether the money will come back more into the mid and large, small caps. And that's where we're seeing very mixed views from a lot of investors, depending on whom you speak to. The large global investors who want liquidity, who want large ticket sizes, for them, they can't invest just $5, $10, $15 million in a stock. They're looking for minimum $50 million to have a position in a stock. So they will obviously gravitate toward the large caps. Whereas equally this time, because I guess generally there's a feeling that the China rally is more of a bounce, a dead cat bounce, not really a structural story. India is a true, real, medium, long-term growth story. We want to participate in India. So therefore, we think a lot of the money will come in to some of the India-dedicated funds or some of the EM ex-China funds or Asia ex-China funds. In that context, India could probably get a little bit more of the flow, and we think some of the mid caps and small caps should also benefit. So it'll be quite interesting after June 4th, but we do expect some flow to come in.
Okay. By the way, folks, this market is really piling on the gains, so don't lose sight of that. It's actually a breath of fresh air to see this kind of momentum on the upside because, it's been down days for many days now. Not the Nifty, but look at the mid-cap index, right? The index is up almost 1% and big moves coming in. Finolex Industries is up almost about 8%. You have loads of stocks that are moving up. Union Bank is up about 5%. JSW Energy is up 3.5%. And then you have so many stocks hitting fresh 52-week highs as well. We were talking about some of them earlier. Thermax is really the big gainer. Nalco is at a fresh 52-week high. Oberoi Realty. Pratik, I wanted your thoughts here. Real estate after almost a 10-year lull has come back in a big way. And some people may call it hyping up many of these premium real estate projects, etc. But the proof is in the writing, right? I mean, you can see many of these stocks hitting fresh highs as well. What do you do here? Do you think you can put more money to work in some of these names?
Yeah, we like the residential real estate plays, not the office property plays as much. But the residential side, we think there's scope for earnings upgrades. More importantly, we're seeing very strong volume uptake. It's not being driven by pricing alone. And a lot of these companies in the last down cycle, they've actually deleveraged quite a lot. Governance levels have improved quite dramatically. So to that extent, we like the residential real estate plays. We think there will be continued surprises in terms of the volumes. And pricing-wise, we're also seeing most of these developers this time around in this upcycle are being relatively more disciplined. Unlike, let's say, if you go back 15 years back when there were pretty dramatic price increases being taken, which quickly made housing quite unaffordable. Even now, obviously, prices are unaffordable for a vast majority of the population. But the demand-supply gap is there. And we've seen a lot of projects which have only recently been announced in the last 1 or 2 years. The supply is yet to catch up. So there is still a demand-supply gap. And especially in the metro cities, and increasingly, we think this will spread to the smaller tier 2, tier 3 cities and towns as well, where we think demand will be quite strong. So, and the last angle I would put is the interest rate outlook. That also looks reasonably stable. If anything, perhaps you might even get a downtick in the later part of the year. But combination of a strong residential upcycle, which typically tends to last for many, many years, not just 1 or 2 years, and we're still in the early to middle stages of the residential upcycle, coupled with deleveraged balance sheets, strong volume growth. We think and government policy also we think will be supportive going forward.
All right, Pratik, always good hearing your thoughts. Thanks a lot for joining in and filling us in with those details. Looking forward to having a chat with you in the coming weeks, maybe post the elections. Well, let's focus on a big name that came out with a set of numbers, which is Shree Cement. The numbers look rather good. The stock has come off actually a little bit post the gap up opening. To understand more about the past quarter and how's the year going to shape up going ahead, we are joined by Mr. H.M. Bangur. Hi, Mr. Bangur. Good morning. First of all, congratulations on a very, very good set. Let's focus on the top line. One part of the street cannot understand how come your realizations were down only around 2.5–3%. But there could be an element of power sales. So could you help us out with some more details? One is, how much were the power sales in the past quarter, and on a year-on-year basis, was it much higher? Also, if you could give us some clarity on incentives. Did you book anything in the last quarter?
Every year in the last quarter, there are many yearly incentives which have to be given. They are always booked in the last quarter. So, but that is for every year, it will be the same. When we compare quarter to year, that is last year, the same quarter, that should be the right comparison, because otherwise it is a seasonal product. Every quarter to quarter, there will be big changes. But when we see from the last quarter, the realizations are down by 3%, because basically the prices in the industry has come down. It is not only for us. The cost has come down. Energy costs have come down after the last year's top height. And that is all. So there is nothing special that the prices have been dropped. In fact, our prices on an average is little bit better because of the small branding exercise which we have started in the February. The results will come in this year.
Okay. All right. Could you give us some more details, sir? If you have to quantify the premium sales as a percentage of your mix, what was it for the past year? And you mentioned in the past that you want to see premium sales move up to the mid-teens, I think so. How much was it and where is it headed?
It has not increased at all. We have rebranded. There were two premium products. We have rebranded it to Magna. We have advertised about it. As it is a new product, the prices have also gone up a little. The quality is good. It is well respected. But till now, the volumes are the same. That is around 12 to 13% of our trade sale. And very soon, we have started this new brand only in February. So very soon it should catch up. We have to give it 6 months time before it really matures.
Okay, got it. All right, Mr. Bangur, the street basically works with two numbers for cement. One is on volume growth. I recall that you were saying that low teen growth is what you're looking at for FY24, and you have managed that. Now for FY25, what kind of a volume growth are you looking at? And your EBITDA per ton is holding above 1,350 rupees. What is the range you'll look at? Because you'll have operating leverage, pricing is weak, but input costs are down as well. So these two numbers, volume growth and EBITDA per ton guidance. Please go ahead, sir.
Right. So volume growth, first I will say, it will be again between 8 to 10%. That is what is expected. Expecting that India's GDP will grow at 7% or more. So our volumes will be highly dependent on the macroeconomic situation. That is how the India grows. So if India is expected to grow at 7%, we are expected to grow at 9 to 10%. It was a little conservative. The second thing is regarding EBITDA. EBITDA in a commodity is decided by the input cost, output cost, or any of which we don't have any control. So I will not venture to give any EBITDA guideline.
Okay. Mr. Bangur, good morning. It's always a pleasure speaking to you. So you're saying that you won't be able to give an EBITDA number, but is it fair to assume that your EBITDA per ton will be around this 1,400 rupees, 1,500 rupees, or is it, will it slip well below that? Just trying to get a ballpark estimate.
Ballpark estimate also will not be there, but what I can say is our efficiency levels will increase. So our per ton, when you say about costing, I can say that commercial cost, I don't know, but per ton, our energy cost, energy consumption will come down. Our energy, which is 56% at present, is renewable energy. We would like to increase it to 60%. So these parameters we are following. The cost, we just don't know.
Okay, okay, fair enough. So the cost is something that you can't, you cannot analyze at the moment, right? So this volume growth that you spoke about between 8 and 10% in FY25, is that something that is sustainable despite the kind of pressure that you're getting in terms of demand? I'm asking because, the heat, the scorching heat this time, the elections, etc., has impacted demand quite a bit. Despite all of that, you can still eke out a 8 to 10% volume growth. Is that fair to assume?
Yes, I am saying that with high confidence because demand is only deferred. Every year, the summer comes, the same seasons happen. We are little pessimistic in the beginning of May, June, that demand will come down, but suddenly it picks up. If India is growing, then the cement and infrastructure needs will be very high. So we are confident about the demand growth.
Right, Mr. Bangur, hi, good morning. Prashant here, thank you for joining us. Always good speaking with you, sir. Just give us a little bit more sense on pricing, sir. I mean, not just for you, but I mean, how the pricing dynamics are going to look like through the rest of this F525, because some have been saying that, if before rains, if there's been no real substantial move on pricing, I mean, that's the peak period for one to be able to do that. And then, of course, rain set in, etc. So we are kind of, it's kind of going to be very subdued in that sense. Would you agree with that this year?
No, that was the old theory. When all the housing were rural housing, self-made housing, that time rains were important. The new techniques were not there. Now, most of the consumption is by the reputed builders, organized sector. There, the rains doesn't matter. It is the working hours of the labor. Scorching heat, working hour when the cement can be consumed has come down. And immediately when the heat comes down, say in July, August, the rains are positive, not having any negative impact. That was the old theory.
Okay. So then what you're saying is, I mean, depending on how the situation shapes up, there is room for price increases through the year. Could you give us a sense what that could look like for the industry in your assessment?
My assessment, in the past, we have always seen the price increase is always a little less, 1 to 2% less than the general inflation. The rest of the money comes by more efficiency. Over 20 years, every year we see price rise is little less than the general inflation, and the margins increase because most of it comes because of better techniques, better technology, and the costing comes down by innovations, I will say.
All right, Mr. Bangur, X of the power sales, I just want to reconfirm your realizations are down by 3% sequentially?
Yes, power sales are, because the energy cost internationally, the coal cost has come down. Power business will depend only on the coal cost. We are a converter of one type of energy.
Mr. Bangur, I'm trying to get the... Right. Mr. Bangur, I'm trying to get the core cement realization change. So that is X of the power sales. We'll keep that aside. It is down around 3%?
Yes, it is down around 2%. And the volumes are up by 8%.
2%. Got it. Just one more question from my end, and we've discussed this in the past as well. Of late, various sections of the media are reporting that Orient Cement is on the block. Now, we are unable to confirm whether or not that's true, but when we have the management, they say that it's unlikely to be the case. But you were an investor in the company, in your personal capacity. Any view on the company at current reckoning, and if you have to do some inorganic growth, would this be a potential acquisition candidate?
No. My personal investment has nothing to do with the Sri Cement growth plan. It was very cheap at some point of time. It has given me good return. I am happy about the present management. They are managing it well.
Hey, Mr. Bangur, it's always fun speaking to you to learn about the industry, about your company, and hope you continue to stay well. Looking forward to speak to you again very soon. Thank you for joining us on the channel.
Thank you.
Okay, that's Shree Cements with the way forward. By the way, good-looking market, good-looking screen. The mid-cap index is now up 1%, and one sector that has been doing very well is real estate. DLF's Privana West project in Gurugram, worth almost 6,000 crores, was sold out in 3 days. Our colleague Tim C caught up with Akash Ohri, who is the joint managing director and CBO of DLF Homes, began by asking him about the Privana project and outlook for sales going forward. Listen in.
Well, I think launches happen post the approvals, and therefore some of these approvals didn't come. So there was no conscious plan of shifting it out. But as you've seen, yes, the results have been pretty robust. The margins have been very good. Profit has been good. Yeah.
What about Privana? Was Privana supposed to be launched and sold in FY24? And has it been pushed to FY25 because that's what the sales look like right now? I mean, what will FY25 bookings look at this, given this case of Privana getting pushed in FY25?
Well, Privana didn't get pushed by design, and there were some regulatory issues in terms of approvals that got pushed out. But you've seen we've done well. We've sold out Privana West as well. The 25 guidelines will be about 17 to 18,000 crores that we will do that in sales. So as far as Privana is concerned, again, we've done well. It's an overwhelming response again to a DLF product, and I think we're extremely grateful for that.
Okay, and when we consider FY24 bookings, they were at around 14,778 crore rupees versus 15,058 crore rupees. So how would you explain that?
See, what happens in these things, as you know, most of the sales happen post RERA approvals, and you plan for these launches based on these approvals. But there are times when some of these things don't happen as per plan. But that in no way should you consider or even doubt the capabilities of the sales engine or the demand today of a DLF product. But sometimes these things do happen. You have to take them in your stride. And as you see in Q1, we proved it again. There has been a robust sale to Privana West, and we've done well. So yeah, sometimes things don't go as per plan, but as far as the product is concerned, as far as the geography is concerned, it is pretty well established now and doing pretty well.
So as you said, sometimes things have to be taken in the stride the way they come. You've also spoken about Privana being sold completely. What is the booking value here? All of the Privana sales will be seen in the first quarter itself. Also, how much of the 11.6 million square feet launch is there in the FY25, which is going to come from Privana?
So Privana, the total size, the launch size has been about 5,590 crores, and all of it that you will see in Q1. As you know, it's almost about a 2.8 million plus size. All the other launches as we go along, there is Goa, there is Mumbai, there is Lux 5, some floors, a product in Tri-City. So we've got a good launch pipeline for 25.
A good launch pipeline. DLF has also said that the launch area has increased from 10 million square feet to 11.6 million square feet in FY25. But at the same time, the launch in FY24 has been reduced from 25 million square feet to 24. So are some of these launches getting spilled over for the next fiscal, that is the one where we are in currently?
So as I said earlier, there will be some changes based on demand, some changes based on approvals, and of course, once we get ready with the product launches. So there will be that little bit of a variation that you should always look at. But otherwise, most of it will be as per plan.
So most of it is as per plan, only a little bit of variation. But when we consider the Sector 61 is an added project with an opportunity sale of about 20,000 crore rupees, by when does this get on the line, and what is the capex involved in this?
Well, you saw the success of Arbor. I won't say it's the immediate geography, but it is almost there. So this product is in the golf course extension as you exit the golf course road. We are reasonably excited about the product. It will be a luxury product. I feel there will be a good traction and demand for this, not only here, but I think pan-India and of course from the NRI markets as well. So as far as this particular product is concerned, I think if all goes well, later part of the year, most probably it will be in 26.
Okay, talking about the NRIs and the interest that we are seeing, you've got great numbers from both the Privanas. What is the NRI contribution to the total sales? Last time you mentioned that it was 28%. Has there been an increase in this time?
Well, last time it was about 22, 23 odd percent. It's increased to about 27%. What is heartening to know these days is that the NRIs are backing the Indian good real estate in a good way. There was a time where most of these investments have dried up. But I think it's good to see them come back. Most of the NRIs that we are talking about are investing for the future. This is, should they return in 4 to 5 years, they make these investments. I think that's a market we will continue to develop and explore.
What percentage of buyers have opted out for housing loans? Can we understand? Because the pricing is quite, as you said, these are luxury segment houses and a lot of NRI interest. People are looking this as an investment so that once they come back, can we get some details on that?
Well, at this point in time, the booking amounts are 50 lakh rupees, which generally come in from the customer themselves. But the banks have been very active and very supportive. So I think to start with, they will be about at least 30%, if not more. But those numbers I'd be able to, give you more accurately, say in 3 months from now, because at this point in time, mostly internal accruals are where the monies are coming from. So, but the banks are there. Most of the big banks are doing good business. And I think this particular trend will continue.
Which projects are you going to launch during the year that will clock sales of 36,000 crore rupees? I mean, that's the target for the coming fiscal is what I understand. That is FY25.
No, 36,000 is the developable potential. The launch guidelines, as far as the sales guidelines, will hover around the 18,000 crore mark. So we've got, as I said to you earlier, we've got Goa, we've got Mumbai coming in, we've got super luxury in Gurgaon, we've got some floors in Gurgaon. So we've kind of spread out pretty good.
My last question, how soon is the Mumbai launch happening? Where are we on that project, and by when can we see bookings happening?
Mumbai will be sometime in Q3, Q4 this year. So, we've already set the ground for it. Work both from the project side as well as the revenue side has begun. We've started to put our people in place. So, yes, Mumbai, please look forward to Mumbai in Q3, Q4 this year.
Okay, well, that is the word coming in from DLF. It sold out in 3 days of the launch. Who are these people buying such premium properties? But I mean, of course, there is a market for that as well. But let's get back to our equity markets because it's looking pretty good. For now, it's holding steady above the 22,000 almost 22,300. That's a 70-point gain. And the mid-cap index is the one that's surging up almost about 1%. The big movers in the frontliners are Cipla, Adani Enterprises, Coal India, Hindalco, Tata Steel. Metals is actually topping the charts this morning. Almost all metal stocks well in the green. Let's take a quick break. On the other side, we'll have Lalit Agarwal of V-Mart Retail to talk about their Q4 earnings. Do stay tuned in.
Okay, welcome back. I mean, the market's up 70 solid points. It's looking pretty good out there. I mean, all across, all told. I just want to quickly mention two names. One is BSE. BSE is at 2,800 bucks now. It's up 5% as things stand right now. Was nowhere in the picture in the morning, but it most certainly is come back into some really solid gains. And the other one is Sterling Wilson and Solar. That is up 5% as well, 759. So I think that is almost getting to its previous highs. More names in a bit from now, but let's of course get on with more companies which reported earnings, right? V-Mart Retail is the next one. Revenue growth came in line. It reported same-store sales growth of 6%. And of course, they opened 9 new stores, but they also closed 19 underperforming stores. Let's talk about all of this with Lalit Agarwal, founder and managing director at V-Mart. Lalit, hi, good morning. Great to have you with us here. Prashant this side. It's always good to see you. You know, last time we spoke with you, you said that at the margin, consumer sentiment seems to be improving. I think this was back in February when we spoke. So let's just sort of because FY24 is done now, let's kind of put that sentiment into numbers for FY25 if we can. So revenues for the full year 24 went up 13%. And same-store sales growth was up just 1%, 24 over 23. Could you give us numbers? What are you expecting for FY25? Lalit, I think you'll have to unmute yourself.
Good morning. I definitely feel excited and a little more rejuvenated because we are seeing some comeback of the consumption getting witnessed for the last 2 months. March has been good. April has been good. The last quarter has been good, fairly good. So things are coming back to normalcy. We are feeling very excited. We should regain the lost number, which we haven't been able to do for the last 1 year or 1.5 years. So I think we should be targeting somewhere between 6 to 7% of like-for-like growth, and also try to grow some more stores so that we have a ballpark figure of total growth of around 13 to 15%. So that's what we are trying to achieve.
6 to 7% of this is same-store sales growth.
And that's what we think. That's how our planning for the planning purposes we are projecting. And you don't know where does the camel is right now standing. We don't know which side does the camel sit down. So it's yet to come. A lot of things happening in Indian politics. A lot of things happening in the economy. So some of the stuff which is coming up are positive. So we are excited about it.
So when you say there are signs of comeback in consumption, which are the pockets where you're seeing maximum amount of traction? And how is the demand environment in places like UP, Bihar, Uttarakhand, etc.?
So we've seen a little bit of challenge in the state of Uttar Pradesh of late. But yeah, some part of it, we are seeing it coming back in the last 1.5 months. We saw some comeback coming in. We are also seeing some good growth coming in from the eastern part of India. We are seeing some good growth coming in also from Bihar. The southern India seems to be a little bit muted right now. But yeah, once again, for the lower class consumption, as we introduce some new low ASP product lines in southern India, those are giving very good responses. We are seeing a little bit of change in consumer behavior. People are definitely consuming, but they want to consume a little more cheaper product, a little more lesser price product, and they are not consuming a higher price product. So we are seeing a good comeback of rural. We are seeing good comeback of semi-urban kind of consumers, and we are seeing some good growth coming in even from Tier 4. Tier 3 had been struggling. We are expecting that Tier 3 also will improve now. So these are some good signs which makes the economy very stronger. So we feel this should continue, and there's definitely some challenges that we had in the states of Madhya Pradesh, Rajasthan also, but there also we have been witnessing a good growth right from one or 2 months. So I think this is a good move if it continues. Yeah.
So it's safe to say that the worst of the rural pain is now behind us, right, in terms of consumption?
I mean, that's what I project, and that's how I plan. And this is what the pulse of the market that when we travel, we talk to the consumers, when we understand what's going on in their life. So we're seeing some of these things coming back, and people are becoming more confident. If the election results are great, and the confidence level can really get boosted, and more confidence will bring in more and more consumption.
So what does this mean for your own store addition? What is the expected store addition in FY25? I think in 24 you opened about 46 stores. What's the plan now that rural demand is coming back?
We plan similar numbers. We plan around 50 to 55, depending upon the good location, depending upon the number of stores that we get a good, where we can have really positive EBITDA and a good ROC. So those are decisions that we take depending upon the store location. But yeah, largely that's the number that we would project even this year. And we would also maybe close down still some more bunch of stores which are still low performing, or it will not be able to come back to the positive EBITDA numbers. Some of those actions, we have taken aggressive actions in the last year. We'll continue taking some more action in this year as well.
Lalit, just to sort of go back to margins, right? Now, you said that people are it's coming back. You're sounding cautiously optimistic. I think that's the right way to describe it. And you're watching and how things develop. Sure, but you also said that, even within your consumer cohort, people are choosing to consume lower price products, right? Slightly more expensive, and that's not really where the action is. Could you, Lalit, I'm just going to come back to you. I just want to make a quick mention. 2 listings are up on your screen. So one is, of course, TBO Tech. We'll have the management with us in just a bit. The other one is Aadhar Housing, and of course, subdued kind of listing for Aadhar Housing. I think it's a flattish. The pre-open was indicating a flattish rate. It's down about 1%, but look at that. TBO Tech is up 54% on some 4 million shares right out of the gates. 1,411 or so on TBO Tech. So one bumper and one a little softish is what you have to begin these new 2 sort of listings. More on that in a bit from now, but back to Lalit Agarwal of V-Mart. Lalit was saying that to take your point, that the consumption is happening on the lower end price products. What does it mean for margins? You did 7.6% in 24. What should we expect in 25?
I mean, definitely we should expect a little more positive margin because that we had reduced our price points by almost 15%, 14% in the last year, and we would want to now keep it stable. We have reached a certain level. So from here, we want the consumption to come back, the volumetric consumption to come back. So we don't want to really push too hard on the margin piece. We want to definitely bring up the margin by increasing the volume. By the rupee gross margin should go up, the rupee margin should go up. So that's the approach that we have taken up now. And I think the margin should be northward and it should become better, because last time we had 1% same-store sales growth. If we are able to clock 5 to 6% same-store sales growth in the coming year, we should have a healthy margin.
And close to double digits, Lalit, possible? Everything else remaining same?
Let me not put numbers, don't put numbers in my mouth. Let's calculate that and let's hope for the best. And definitely that's what we should eye for, because all the huge losses that we have done in our online business also is something that we are tapering off. We are bringing down those losses. The quarter ended with a very low loss. So we are trying to create a roadmap where we see a little more break even in the online business as well, so that which can overall bring up the margin for the company.
But is the bulk of the cost sort of fixing costs be done, or there is a lot of room on that side?
So I think most of those are done, but still the business model of online is still not so profit making, and there are a lot of issues in terms of the whole logistic costs and the marketing costs and stuff. So we are trying to take more an omni-channel approach, where we're relying more on our V-Mart customers who are coming on the store, who can then latch onto the online piece or go on the store where they don't find sizes and they don't get those product lines in the store. So how they can get it at the home. So some of those pieces we are working on. so that we don't get into the trap of Meta and Google, so that we latch onto those social media marketing and performance marketing. So we are trying to go away with all of those pieces and try to have a very, very balanced approach. So that's something which draws and sucks a lot of money.
Okay, thanks a lot for joining in. Appreciate your time here. Well, for the market, it's getting a bit volatile. So let's get Mitesh Thakkar on board. Mitesh, good morning. It's flat for the index, but the Bank Nifty has now moved into the red, and a little bit of pressure seen, on the sensex as well, down about 40 odd points. Your thoughts for the rest of the day? What should the order look like, and what are the stocks to look at?
I think I'm still looking at the markets in the sense that in case we manage to stay above 22,200, 22,190 zone, then I think towards the noon session or the closing session, I think we should recover. So this is a good level to take long position with a 40-point kind of a stop on the Nifty, and there's a good chance it might work out on the upside. On the stock side, I have a buy on Oberoi Realty with a stop at 1575. Look for targets of 1665, 1670 to begin with. Eventually, it can go higher as well. And on the other stock, I have a buy on REC with a stop at about 520 for targets of 550.
We got market absolutely flat, right? Now in the red, actually. The Nifty is also now in the red. So that's a sharp drop-off which we are seeing at this point in time. Look at that. If you can have the intraday up on your screen, and this has happened quite quickly. I mean, we were at the day's high at 9:56. Not even about 8 minutes back, and look at the slide which has come through on the index. Mitesh, this is pretty sharp, right?
Yeah, Prashant, I think the market has come off, but again, it's not a big decline. It's just about 70-80 points kind of decline, which is less than 0.5%. This can happen. But as I said, I think watching 22,190, 180 zone very closely. The support is at 22,200, so you might see a 10-15 point kind of violation. But if we start hitting below that, then I think, we'll exit our long exposure.
Just take a look at what is kind of causing the maximum pressure. There's nothing. HDFC Bank is adding about 12-13 index points. I mean, I think what was up is essentially given up most of the gains, and that is where the problem really lies. For the indices. I mean, Reliance is still pulling for the bulls. Tata Steel, NTPC, etc. still all in the green, but there's more down than up as far as the Nifty is concerned. But Sonia, I think we have the management of Mazagon Dock joining us.
Yes, we do. In fact, recently Mazagon Dock completed 250 years in service. Defence Secretary Giridhar Aramane described Mazagon Dock as a precious jewel in the crown of India that has contributed immensely to building capacities for naval and commercial purposes. Now, the shipbuilders recently acquired land from the Mumbai Port Authority as well. So to discuss more on the way forward, what's the roadmap, we have Sanjeev Singhal, the Chairman and Managing Director of Mazagon Dock Shipbuilders, who's joining in. Sanjeev, thanks a lot for joining in. And I mean, the stock as well has been a huge performer in the last 1 year. It's given great returns to shareholders. So congratulations on several fronts on completing 250 years and, of course, adding a lot of value to shareholders as well. But I want to start by asking you, some questions on the earnings, right? Because you've had good growth over the last couple of quarters. I want to understand what is the roadmap from here? What are the growth drivers? Any change in either the vision of the company, the mission, and what kind of annual compounded growth can the company deliver over the next 3 to 5 years?
As far as the financial figures are concerned, I was told that I will not be speaking of financials because this happens to be the silent period up to the publication of the accounts and approval by the board. So broadly, I will be maintaining whatever has been there with respect to the past quarter. So without very much on the financial performance, what I can speak about the company is, yes, the points which you have touched upon, that there is a specific persistent thrust on indigenization and exports, and on these fronts, Mazagon Dock Shipbuilders is working very consistently. As you have informed that we have recently acquired additional 15 acres of land on long-term lease from Mumbai Port Authority, and this is the land which is at the existing boundary wall of Mazagon Dock Shipbuilders. So this facilitates in many respects that this would be a feeder facility. A lot of duplication of investments is saved, so we can create infrastructure, and we have plans to create infrastructure and certain balancing facilities, which would be adding to the infrastructure and capabilities and capacities of the existing yard. In addition, we have also started developing the Nava yard, approximately 10 nautical miles from the existing yard. And we plan to construct vessels for which we have already received the orders, around 21 vessels from Coast Guard, which we received between October to January 23-24. So these vessels we plan to construct at the Nava yard with the floating dry dock, which we expect to be in place by October next year. So through roll-on, roll-off operations, the vessels would be launched. So these are some of the programs we have also initiated and found some success in the area of exports. So we have received certain orders, around 6 vessels we have received from a European client, and we expect these are certain steps which are in the right direction. And as rightly pointed out, that Mazagon Dock Shipbuilders continues to be a jewel in the defense industry, and particularly with respect to Navy. So we are also state that almost all the frontline weapon-intensive combat-worthy platforms, practically all indigenous platforms have been supplied by Mazagon Dock Shipbuilders to the Indian Navy. So this we continue to traverse the same journey.
So what according to you, sir, what according to you is the future of shipbuilding? What kind of investments do you see come into this space? What kind of opportunity do you see for you shipbuilders like yourselves? Of course, as we know, you are the biggest shipyard in the country, so you are contributing most to the assets of the Indian Navy. But just overall for the sector, what do you think the big growth triggers could be, and what is the future now?
Considering the geopolitical situation around, I believe that investments, as far as the defense is concerned, this cannot be pegged at any number. So whatever would be the requirements, we see there are huge requirements with respect to submarines, for which we have already participated in the bid, P-75I, Air Independent Propulsion System, 6 numbers. For the additional Scorpion submarines, for which we have submitted the details to the Navy, 3 numbers. There are requirements for the additional destroyers. There are requirements for the additional frigates. So going ahead, we definitely see that the market is growing. In the commercial sector also, a lot of demand is there, and repair repeat segment also, which has not been tapped by us in a significant manner till now. But with the growth in the facilities and infrastructure, so this is also one segment which we would be so I see that there is a significant potential as far as the shipbuilding industry is concerned.
So hi, good morning, Prashant here.
Yeah.
I know you can't talk about because the silent period, but can you give us a broad sense? I mean, this is, I think, something we discussed earlier as well. What is the sort of order pipeline for which you have visibility looking like? What is that amount to right now?
I can speak about the published numbers. As far as the 6 number AIP fitted P-75I submarines are concerned, as per 2018 A1, it is approximately 43,000 crores. So maybe with the escalation for the past 6 years, this figure would have risen substantially. We have submitted our bid, so right now not in a position to comment with respect to what bid has been submitted. On similar lines, we have an order for 6 number of Scorpion submarines, of which we have already delivered 5. The last one we are targeting to deliver this year. In the same series, we are discussing additional 3 submarines. So this also, the details have been submitted to the Navy. Once the bids are accepted or opened and discussed, then only the numbers would be known. So this is with respect to the submarine area. And with respect to the destroyers, next generation destroyers, the ball has started rolling. We understand there is a requirement of 6 to 8 next generation destroyers. Similarly, with respect to Project 17 Alpha frigates, of which we are supplying 4 numbers and GRSC is supplying 3 numbers. So there again, the discussions are on with respect to a follow-on project of 17 Bravo. So again, frigates, which we expect could be 6 to 8 in numbers. So the finer details and contours and with respect to the pricing and the overall project size, this clarity would emerge with time. As of now, I can only say that 17 Alpha, as far as MDL portion is concerned, 4 frigates, it is approximately 27,000 crores. which is being executed currently and which is an order of 2015. So there could be guesses with respect to what should be the pricing today. And with respect to destroyers also, which is 4 in numbers, 15 Bravo, which we have 3 we have delivered and last one we are targeting for delivery this year. So this was a 2011 order, approximately 34,000 crores for 4 numbers. So here again, the numbers can be guessed with respect to what the likely number today for another 4 destroyers, or depending upon the number, whether it is 6 or 8, and how the Navy proceeds on it with the one single shipbuilder or 2 shipbuilders.
Got it. Got it. So just to, of course, I mean, the pipeline, as you said, a lot of this is discussion, right? And then orders are finalized and then the tender is placed out. But, and all that, we'll track that. For now, you're awaiting sort of the tenders to be opened for the P-75 order and 3 submarines, right? Immediately.
Yeah,
I mean,
additional submarines Scorpion and P-75I.
Yeah, okay,
6
got
numbers.
that. Okay, got that. So we'll leave it there. Thank you very much for your time. Great speaking with you, and I hope to speak once again to you once the numbers are released, and you will be able to speak put out some numbers, specifically some numbers to what we discussed here today. We'll take a quick commercial break here. The market, of course, very, very volatile, completely off the highs. Manisha is here with the commodities on the other side. Stay tuned.
Welcome back. So let's do one thing. Let's get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, what's been buzzing over there?
A lot of things really, Sonia, but I'm looking at copper yet again because we've seen nearly 5% of gains in the overnight markets, and in the US, the crude price, rather the copper prices are now trading at an all-time highs. It's trading at a 2-year highs on LME, but on CME, on Shanghai, and in the Indian markets, it's an all-time high that you are seeing in case of copper prices here. Very strong gains is what we saw in the month of April, and May really seems to be building up on that. Well, if you look at the CME copper prices, we are at $300 in premium to the LME prices right now. So that tells you that the US demand clearly seems to be picking up on ground, and there is tightness in the immediate delivery in sense of copper, and that really seems to be supportive. In any case, the long term continues to be bullish. There are tight supplies. We have seen CME copper inventories decline by 30% since late March, and that has been supportive for the prices there. The Chinese economic data seems to be on the positive side, and the latest tranche from China in sense of 1 trillion yuan in bond issuance is something that really seems to be supportive. China, remember, consumes 50% of the global copper. So whatever happens in China does impact the copper prices there, and we have seen that impact working in as well. As I said, for the near term, the inventories seem fine, but it is the longer term, 2025-26, when the markets believe that this demand will be higher and supply will not be able to catch up. The Chinese copper smelting also has declined by 10% in 2024. So there are various factors in sense of supplies which seem to be supporting the markets right now. And the demand also seems to be coming in from the electricity and EVs, but also from weapons. There's a report that suggests that there's a lot of demand coming in from defense as a sector as well. And then you have green energy, data centers. So demand for copper going forward in the next 2 to 3 to 5 years does seem very, very strong. Now, this is a very interesting chart coming in from Bank of America, which does show you on what the global production and global consumption numbers look like. So I've taken the last year where you have the global production numbers at 25.9 and consumption slightly lower than that. This is also a year when you are working with a surplus. Now, this year, when you look at the markets, that surplus seems to have gone down. While the global production has gone up, so has the global consumption, and by leaps and bounds. Now, for next year, we are turning into a deep deficit year. So while the production does stand at 27.6, the consumption is expected to grow many-fold, and that is what the markets are factoring in case of prices right now. Is the reason you have Goldman Sachs, Bank of America, Citi, everybody suggesting that $10,000 a ton is now done, and $12,000 is what they're anticipating in the next 8 to 12 months.
Okay, thanks a lot for that. We'll take a quick break. We'll get chatting with Ankush Nijhawan and Gaurav Bhatnagar of TBO Tech on their stellar Dalal Street debut. Stay tuned. Well, the online B2B travel distribution platform TBO Tech made a stellar entry on the bourses, listed at 1426 rupees versus the issue price, which was 920 rupees. Now, TBO Tech's co-founder and joint managing director Ankush Nijhawan and Gaurav Bhatnagar are both with us. Gentlemen, morning, and thank you for taking the time out and speaking to CNBC TV18. Congratulations on a good listing. Ankush, I want to start with you. You know, this, of course, the space that you're in is growing in a huge way, and the online B2B distribution platform, right, in travel, I want to understand what kind of growth rates are sustainable over the next couple of years, and what's the big trigger for you going ahead?
So first of all, thank you for inviting us this morning on a very, very happy day for all of us at TBO. I think for us, what we have done in the past, is what we will continue to build. And the growth, what we have demonstrated in the last 2-3 years. Fundamentals are strong. We believe in building the business in the right way and ensuring that we deliver the right services both to our supply and our demand. On the other side, the tailwinds are definitely, in the favor of the tourism and hospitality industry. We all read this, there's no rooms available. People are traveling across the world. The airlines are adding more aircraft in India. Plus, the airport is putting a lot of money behind the infrastructure. So I think all these, the things which will definitely help us to grow, to the levels we expect, and keeping in mind the fundamentals, what we've been delivering for our partners and suppliers.
So can you help us with some numbers now that you're listed? What is the kind of growth rate that one can assume for the business, both on the top line as well as the expected margins in both FY25 and 26?
So our intention is to, maintain the same rates what we have done in the past. But now as we go forward, let's see, which way we go. But definitely, we are very positive on what we want to do and our growth rates as well.
Right. Gentlemen, morning. Ankush and Gaurav, and congratulations once again. Super listing. Prashant here. Ankush, so when you say expect to continue to grow, FI between 21 and 23, revenue CAGR was some 174%. Now, of course, that was also marked by COVID, so you're kind of coming off a low base, and so maybe not exactly comparable. Would you want to put some numbers to it, even in the ballpark? That'll be helpful.
So, Prashant, look here, you're right. Coming out of COVID, obviously it was a small base. If you were to compare our numbers with the last year pre-COVID, FY20, you would see that roughly since FY20, revenue has a little more than doubled, and EBITDA has grown faster because of operating leverage. Rather than putting some specific numbers on future forecasts, let me just tell you, the space that we operate in and what's the headroom for growth. TBO is a global platform. We operate in more than 100 countries. 70% of our revenue comes outside of India, and we operate in the global outbound travel space. Now, this space is $2 trillion, roughly $2 trillion in size, if you look at total travel spend only on outbound travel globally. We'll be somewhere between $3 and $4 billion out of that $2 trillion. So there is no dearth of headroom for growth in this business. So while, we would not be able to comment on specific growth rates, our belief is that given the tailwinds in the business, given the size of the industry that we operate in, given the fact that we operate in pretty much all the 5 continents, we would expect to see a bright future ahead.
No, I mean, FY23 revenues were 1,065. You're already at 1,023 for the 9-month period. So, yeah, I mean, growth should be good. You're saying your total addressable market is $2 billion, Gaurav?
$2 trillion, Prashant, $2 trillion.
Sorry, that's the global, right? But you said global outbound from India.
Prashant, so no. Prashant, so our business, let me explain what the business is. So we aggregate travel agency demand globally. So whether it's a travel agent in India or a travel agent in the Middle East or a travel agent in Brazil or Indonesia, when a traveler comes to them and they want to book an outbound itinerary, so somebody traveling from Brazil to US or somebody traveling from India to Europe or somebody traveling from Dubai to Indonesia, our platform serves as a bridge between demand and supply, right? So that is the space that we operate in. Now, if you step back and look at how large that space is, 1.5 billion outbound trips happened in 2019, similar numbers this year. So look at that number, right? 1.5 billion people traveled globally.
Right.
And that number grows 6-7% every year. So 100 million more trips get added to this pie every year. So that is the space we operate in, Prashant. And then that's the reason we believe that, from where we are, our global market share is still very low and huge headroom for growth.
Right. That number, though, that trillion with a T, the number, Gaurav, that you put out, that is the value of all flights taken, right? I mean, total travel, right? the space that you operate in,
Total travel spend.
Total travel spend. Correct. But the space that you operate in, could you kind of describe, which is kind of, sort of connecting the buyer, the suppliers and the buyers on the on the other side? Could you give us a sense of how large that kind of market is? And just for our viewers, I mean, there is another company which is listed, which is RateGain. Broadly speaking, can I say you're in the same kind of space?
So, Prashant, I'll take the second question first. RateGain is part of the same supply chain, though they sit at a different part of the chain. We use a platform like RateGain to get access to travel supply from hotels, right? So, while we negotiate with the hotels directly, but when we need access to rates and inventory, we connect to platforms like RateGain. So, RateGain is very much a partner. On the size of the market, Prashant, sometimes it's surprising to see how large travel industry is, but just outbound travel spend is in the space of $2 trillion, right? If I were to double click on that, just the hotel spend, right? The global hotel GTV is a little short of $1 trillion, right? So that's the kind of space that we are operating in. And because we are operating in a global space, we are operating in across all the 5 continents. We do believe that when we look at addressable market, we do look at the global addressable market.
I just have one final question for Ankush before we let you go. Any other growth avenues or areas of growth apart from the hotels and the airline space that you're looking at in the near future?
So we will definitely, build on our ancillary products, which is primarily rail, sightseeing, Eurorail, which I think car rental, for example, because we want to complete our offering to the travel buyers. Which helps us to, further, get more stickiness from them. It also helps us to get more wallet share, on that transaction with us. So that's definitely a plan, apart from obviously deepening and building our hotel and air business as well, which is our prime focus.
Gaurav, would you want to give us a little bit of color on what margins, I mean, what's the headroom to, margins were at about 18% or so last year. What's the steady state we can expect from TBO?
So look, Prashant, our business has operating leverage in it, and if you see historically last 3 years, our margin our EBITDA margins have been growing. The company's strategy is that from a take rate perspective, which is the commission that we keep for ourselves versus what we leave for travel agents on the table, we don't want to change that at all, right? We want to make sure that the platform is not expensive for the buyers or the sellers to operate on. So we are banking on the fact that top line growth will translate into higher bottom line growth because of operating leverage over the next few years, and hence EBITDA margins should expand from where we are.
So essentially the number of what we should track, the one metric that we should track is the number of bookings that you're handling. That's the number to track? Because
I think
pricing...
internally the North Star metric is how many travel agents are operating on the platform every day. The business is the platform business, so there are network effects. We know that historically the GTV grows faster than the number of active travel agents, right? So that's kind of like the number we like to track.
Okay, all right. We'll leave it there and we'll sort of have you back for a longer chat. Interesting space, and thank you very much for joining us with a lot of that perspective. Ankush and Gaurav, congratulations once again from all of us here on a very superb listing today, especially on a day like today, because the market, of course, is not doing all that well. We're off sharply. We're down 50 points on the day, 22,168. It's a wrap on this edition of Bazaar. From all of us here, it's goodbye. Chartbusters will pick up on all the action in just a bit from now. Stay with us.